flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-Concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, E-Concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing E-Concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-Concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call it biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism die, in case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-Concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, E-Concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, And this is Bloomberg Green.
D2 Brookline, Boston, WNBP Newburyport, KNEW Oakland, KOSF HD2 San Francisco, and Sirius XM Satellite Radio Channel 119. This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Yes, indeed, everyone. It's a new week. It is Monday, March 15, 2021. Carol Master along with Tim Stenovic live in our Interactive Broker studio, streaming on YouTube. We've got a day of most read stories.
We do, but I'll say, beware the Ides of March.
Well said, well said. I always do feel like this is a kind of an interesting time. Everybody's got to kind of beware. Know your friends and foes. All right, so listen, coming up, we're going to talk about the first major tax hike since 1993. It could happen. Also, Goldman's CEO and his island getaways. Yeah, that explains why it's among the most read stories.
That is such a fantastic story. I'm so excited to talk about that one.
You talked about it on Quick Take. We're going to get some more here in just a moment. First up, though, let's set the tone, the trading tone. Let's check in with Charlie Pellet.
All right, thank you very much. Happy Monday to you both. Best level of the day right now on the S&P, higher by 7. Up 0.2%. The Dow, NASDAQ 100 index, all pushing higher right now. Stocks have been fluctuating, but right now we're in the green on the S&P, up 7, up 0.2%. The Dow up 75, higher by 0.2%. NASDAQ up 60, that is a gain of 0.5%. Stocks fluctuating near records as investors weigh the budding economic recovery and progress on vaccines against the risks of rising inflation. 10-year yield 1.60%. We've got a two-day Fed meeting beginning tomorrow. Gold up 0.2%, $17.29 the ounce. And West Texas Intermediate crude retreating now by 0.4%, $65.37 a barrel. Mixed day for some of those high-flying retail names. GameStop shares, they're down 7% right now. AMC Entertainment surging 26%. Costs, the headphone people, up now by 5.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Just a reminder, everybody, we are expecting some comments from President Biden talking about the implementation of the American COVID relief, COVID stimulus plan, Tim. So as soon as they begin talking, we'll take everybody there to the White House.
We certainly will. He's taking his victory lap still after passing that $1.9 trillion stimulus package.
Right, getting people out across the country to tell them exactly what is in that plan. All right, you are listening to Bloomberg Business Week. It is time for the Market Drivers Report. And let's set the Business Week agenda on this Monday. Dave Wilson, stocks editor at Bloomberg News, with us on the remote access in New Jersey. Laura Davison, she's congressional tax reporter at Bloomberg News. She's with us on the phone from Washington, D.C. We're going to take you, though, right to the nation's capital and the president.
Last week, I said help is on the way. This week, I can report this isn't just on the way, it's here, sooner than many ever thought possible. Over the next 10 days, we'll reach two goals, two giant goals. The first is 100 million shots in people's arms will have been completed within the next 10 days, and 100 million checks in people's pockets in the next 100 days. Shots in arms and money in pockets. That's important. The American Rescue Plan is already doing what it was designed to do, make a difference in people's everyday lives. And we're just getting started. By the time all the money is distributed, 85% of American households will have gotten a $1,400 rescue checks. To give one more example, for the average family of two parents and two children, making a combined income of $110,000 a year, that's going to add $5,600 for them. $5,600 they'll get. And the plan does a lot more. It extends unemployment insurance for the 11 million Americans unemployed and any who will be unemployed in the near term. It'll help hundreds of thousands of small businesses keep their doors open, which makes a gigantic difference in neighborhoods and communities. If you have a drugstore, if you have a beauty shop, a hardware store, it's a center of small communities. And it gets our schools and resources they need to open safely. It provides the biggest investment in child care since World War II. And it provides food and nutrition help for the millions of families, keep them from going hungry, keeping a roof over their heads. And it expands health care coverage and lowers health care costs for so many people. And it will cut child poverty in half in this country. That's the estimate. Child poverty will be cut in half as a consequence of what's in this Recovery Act. And it will generate economic growth for the entire nation. That's why major economists, left, right, and center, support this plan. Even Wall Street has agreed. According to Moody's, by the end of this year, this law will spur our economy to create 7 million new jobs. And it does one more thing. It focuses on rebuilding the backbone of this country. Working families, the middle class, people who built this country. But as I said last week, it's one thing to pass a historic piece of legislation like the American Rescue Plan, and it's quite another to implement it. And the devil is in the details. It requires fastidious oversight to make sure the relief arrives quickly, equitably, and efficiently with no waste or fraud in your bank account, in your mailbox, to the local business, in your community, and to your child's school. Look, I've been here before. When President Obama and I came to office in 2009, he put me in charge of implementing the Recovery Act, which helped us recover and rebuild during the Great Recession. I was authorized to put together a team, including an accountability board with inspectors general from different agencies that were affected by the act, to make sure we got the roughly $800 billion out into the countryside by the book and quickly over 18 months. I talked to literally almost over 150 mayors, all governors except one, constantly going over the granular detail of the implementation of this legislation, that legislation. And the effort put us on a path from crisis to recovery to resurgence. Accordingly, to the Oversight Board of Inspectors General, they said we got it done with less than 0.2% waste or fraud. And that's not what the previous administration did, though. When the Congress last year passed the CARES Act, the Congress created a committee of inspectors general to make sure every penny of that money was spent as it was directed. But one of the first things the previous administration did was fire the head of the Inspector General's committee. So when Congress passed what was intended to be a small business relief program, it instead became a free-for-all for well-connected companies. And mainstream businesses, from hardware stores to beauty salons, that needed the help most were left behind. 400,000 are now gone. We will not let that happen this time. I learned from my experience implementing the Recovery Act just how important it is to have someone who can manage all the moving parts with efficiency, speed, and integrity, and accountability. That's the sort of management we've seen in our fight against the virus with Jeff Zients, our COVID response coordinator. And today, I'm pleased to announce and introduce another gifted manager to coordinate our implementation of the American Rescue Plan, Gene Sperling. Gene will be on the phone with mayors and governors, red states, blue states, the source of constant communication, a source of guidance and support, and above all, a source of accountability for all of us to get the job done. Gene's been here before. The only person in history to serve as director of the National Economic Council twice. He led successful efforts to deliver relief to small businesses and unemployed Americans in the Obama-Biden administration and in the Clinton administration. I spoke with Gene earlier today alongside my economic team. He's ready to get to work. In fact, he's already hit the ground running. And together, we're going to make sure that the benefits of the American Rescue Plan go out quickly and directly to the American people where they belong. Let me close with this. Help is here, and hope is here, in real and tangible ways. We're just days away from 100 million shots and millions in the arms of millions of Americans. That's the way. That's the way, on the way, to get every single American access to the vaccine. 100 million checks going into the pockets and/or direct deposits going into the pockets of Americans on the way to millions of more Americans. That's real progress. We have a lot more to do. We have to prove to the American people that their government can deliver for them and do it without waste or fraud. That we can vaccinate the nation, that we can get our kids safely back in school, that we can get our economy back on track by helping hundreds of thousands of small businesses open and stay open, and that we can give people of this nation a fighting chance again with relief checks, lower child care costs, lower health care costs, and so much more. That's our job. That's our responsibility. And in the process, we'll be growing the economy as well. We're going to have to stay on top of every dollar spent through the American Rescue Plan. And that's what we're going to do. We can do this. We will do this. God bless you all. Help us on the way. And may God protect our troops. Thank you very, very much.
Should President Trump help promote the vaccine among skeptics, sir? Especially those Republicans who say that they're not willing to take it?
A lot of reports from serious reporters like you saying that. I discussed it with my team, and they say the thing that has more impact than anything Trump would say to the MAGA folks is what the local doctor, what the local preachers, what the local people in the community say. So I urge all local docs and ministers and priests to talk about why it's important to get that vaccine, and even after that, until everyone is in fact vaccinated, to wear this mask.
All right, President Biden stepping away from the podium, taking one question there in terms of the supporters of Donald Trump and whether or not the former president should speak out to those supporters about wearing masks and getting the vaccine. What's interesting is, I think, Tim, the key headlines from President Biden taking another victory lap when it comes to his massive COVID relief package, talking about over the next 10 days, 100 million checks will be delivered to Americans, talking about child poverty being cut in half specifically, and once again, talking about vaccines, days away from 100 million shots in the arms of Americans.
Shots in arms and money in pockets. The American Rescue Plan is doing what it was designed to do, making a difference in people's lives. That's what the president said. It's not just about taking a victory lap. In my opinion, it's really about selling clearly the benefits to the American people so that they know when they see this money show up in their bank accounts, when they see the benefits of this, they know who it's from. I think politically that's really important to Democrats and to the president right now.
I think it's really important. important too. You make a really good point about the political process, how it all happens, and understand who was in support of it, what specifically was there, and how individual Americans are going to benefit. I thought also key, we should just point out Gene Sperling, longtime top economic aide to various Democratic presidents. He was involved with President Obama during the financial crisis, helped with the auto bailout. He's also been an informal advisor to Joe Biden during his campaign. So he will be overseeing the spending from that $1.9 trillion relief plan. So he will be overseeing it all together. All right, so add it all up. What does this mean in terms of where we are in terms of the trade and some of the key stories we're focusing on? Let's bring in, as we mentioned before, Dave Wilson with us, stocks editor at Bloomberg News, Laura Davison also with us, congressional tax reporter at Bloomberg News. We'll get to her most read story on the Bloomberg in just a moment. Dave, though, set the tone in terms of trading today. Feels like it's a little bit mellow.
Yeah, it is, no question. I mean, that said, we're looking at stocks at their highs of the day, which is saying something. And, if you want to know how we got there, I mean, one interesting piece of it is that it's the interest rate sensitive areas of the market leading the way, utilities and real estate. It's not the kind of economically sensitive companies that we've seen recently. So, as much as anything, maybe it's just that bond yields aren't going up for a change. And so that's enough to encourage at least some investors to go toward the rate-sensitive stocks and maybe steer away from the energy and financial shares, which are the worst performers among the 11 main industry groups in the S&P 500. Another thing that's notable about today, travel stocks. You look at the best performers in the S&P 500. You see United Airlines and American Airlines. And then you look down the list, you see MGM Resorts, Las Vegas Sands, Carnival, Royal Caribbean. So, it's one of those days where people are feeling relatively confident about the prospects for renewed travel as more and more people get the coronavirus vaccine and, those issues start to fade at least somewhat.
And potentially new taxes, as Laura Davison, our colleague who's congressional tax reporter at Bloomberg News, noted in a recent story among the most read on the terminal right now. Laura, talk a little bit about what the Biden administration is planning when it comes to tax hikes, not for this $1.9 trillion COVID-19 stimulus act, not to pay for that, but for the next ambitions of the Biden administration.
So while Biden is out and kind of selling this last plan, his policy aides are already kind of deep in the weeds on what this next infrastructure, energy, health, education bill is going to look like, and particularly how they're going to pay for it. So kind of step one, they're looking at rolling back those Trump tax cuts back from 2017 for corporations and for individuals. So, we'll see the corporate rate come up in their plan, as well as that top tax rate, which is around 37% now, tick up closer to around 40% is what they're talking about. Then they're kind of looking to go even further and looking at, specifically the estate tax, capital gains rates. What there can they do to really hit kind of the wealthiest Americans, kind of increase their tax burden, as there's kind of been a big push to make the tax code overall a lot more progressive.
Laura, does the president, do the Democrats all need to be on board, and do they need to woo some Republican members of Congress in order to get this done?
So Democrats can do it by themselves, and that's probably the most likely way if they're able to get this done, that they'll have to do it. Republicans out of hand are just like, nope, not gonna even engage on this issue. Democrats in the Senate, like with the stimulus bill, we're going to need, they'll need 50 Democrats to vote for it. So that means, kind of like we saw in this last round, people like Senator Joe Manchin, Kirsten Sinema of Arizona, they're going to be key players in looking to probably curb what some of the policy that comes out of the White House, moderate it a little bit, make it, kind of bring those rates down, and just generally, make it maybe a less ambitious project going forward.
Hey, Dave Wilson, I'm wondering what happens to the stock market if the corporate tax rate does indeed rise to 28% from 21%. That's according to the reporting from our colleagues Laura and Nancy. With some of the proposals when it comes to these new tax changes?
Well, it's going to be an issue for investors, no question, because, you've seen tax rates go up, and that means profits would have to take a hit, presumably because of that. Just as the reverse happened, a couple of years ago with the tax cuts that were put in place under President Trump. So, at a time when people are really looking forward to a recovery in earnings, starting in a few weeks when we get the first quarter results, I mean, the idea that you're going to have perhaps a larger tax burden down the line, it's just not going to go over well, I would think.
Yeah, we'll have to look into some of the tax research in terms of higher rates and what it ultimately means, because I think companies we know have been very smart in figuring out how to manage those, you know.
That quote-unquote effective tax rate.
Exactly. All right, guys, thank you so much. Dave Wilson, our stocks editor, and Laura Davison, congressional tax reporter at Bloomberg News.
It's time now for the Bloomberg Business Week Bite of the Day, one number that tells us a lot, brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com.
All right, today's number, 150 million. Microsoft could receive more than $150 million of new funding for U.S. cybersecurity defenders. This is at least, Tim, according to Reuters. The money has reportedly been allocated from Microsoft as a way to help other federal agencies upgrade their current Microsoft deals to amp up the security of their cloud systems. Listen, you know companies, after how many hacks that we've seen, cybersecurity problems, everybody's got to be looking at their systems to make sure that they are secure.
I honestly have trouble keeping track of how many hacks we see.
Yeah.
There is a new one every week. Go ahead.
No, and getting deeper and more serious, right? So you can certainly understand why this is happening. I feel like this is a story we know because of all the political news at the start of the year, the hack into the U.S. government, you know, and that was because of a Russian entity, right, specifically?
Exactly.
And I think a Chinese entity was that involved in it as well, that there's a lot more attention that people said wasn't paid and that we now need to pay attention to it.
And what about last week's that our own William Turton investigated with the Verkada hack?
Exactly, in terms of security cameras. So, all right, there's a lot going on, and you can understand why this is happening. All right, let's get back to your top business stories and another check of that trading day. Here is Charlie Pellet.
Thank you very much. Stocks higher as investors weigh the economic recovery and vaccine developments. Europe's biggest countries, including Germany, Italy, and France, have suspended use of AstraZeneca's COVID-19 vaccine amid a growing health scare that's creating yet another delay for the European Union's inoculation campaign. ADRs of AstraZeneca, they're up now by 0.4%. Stocks higher across the board. Best levels right now with the S&P up 10, up 0.3%. The Dow up 83, also up 0.3%. NASDAQ up 73, up by 0.6%. 10-year yield 1.60%. Gold up 0.2%. 17.31 the ounce. Crude oil West Texas Intermediate down 0.2%. 65.50 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Want to get right to our next guest. Mike Alkire is with us, President and CEO of the Healthcare Improvement and Supply Chain Company. It trades on the NASDAQ. It's called Premier, and he is back with us on the phone from Dallas. Mike, nice to have you back with us. You guys are front and center when it comes to the healthcare and COVID supply chain. What does it look like right now? And first of all, how are you? Do we have Mike?
No. So.
Okay, we've got you. How are you?
Hey, good, Carol and Tim. Thanks for having me back. So, just a quick update on the vaccine distribution numbers. Right now, we're doing about 2.3 million vaccines per day. That compares to about 540,000 for the first 6 weeks of the pandemic. So we're catching up. I think the most important part of that number is that we're on track to exceed the Biden administration goal of hitting 150 million vaccinations in the first 100 days.
That goal was a little low, though, right?
Well, it's interesting. I think when people were thinking about it when he said it, it seemed a little bit high and seemed aspirational. But I will tell you today, we seem to be on track to surpass it.
What about when it comes to PPE right now? The story, if we think back to a year ago, was do not buy masks if you're a consumer, not just because you need to reserve them for healthcare professionals and there was a worldwide shortage, but also because we didn't know that this was the type of thing that was so easily transmittable through breathing. Where are we when it comes to PPE, not just for us, but for healthcare professionals right now? What does the supply chain look like?
Yeah, I guess the first thing we've learned with the whole issue with COVID as it relates to PPE is that we've got to diversify our portfolio of manufacturing just like you would hedge against risk if you had an investment portfolio. And there was such an overdependence on China and other Southeast Asian organizations or countries. And I think that, today where we are Premier's taken steps along with a number of others to try to create more resiliency in that supply chain, where we've made investments along with our healthcare systems in the domestic production of face masks, made investments in the production of isolation gowns, and we're also doing similar stuff with exam gloves and generic drugs, because we think that obviously those supply chains have a lack of resiliency to them. So we want to create a bit more resiliency and obviously create more diversification in those supply chains.
Yeah, how easy is that to do? Especially when it's, we've all kind of farmed everything out to, in many ways, a lot of emerging markets.
So it's a great question. Look, we've been talking about this for the last 10 years. It's been a significant issue on our minds. And it's tougher now, obviously, to do it, but we were able very, very quickly to stand up face masks and isolation gowns. We have a partner that's going to be able to stand up exam gloves probably domestically in the next 18 months.
Yeah.
I'll tell you, while it's difficult, we have to do it because in 2020, the only economy that grew was China at 6.5%, and the U.S. economy shrank during the pandemic at almost 4%. So I think that there's been this great shift of wealth from the U.S. to, obviously, to China, and we've got to rectify that by creating a more resilient supply chain.
Easier said than done, though.
It's absolutely easier said than done, but we've got to start the hard work now. And by the way, I heard a little bit of your interview at the prior folks on what the administration's doing from, really what are the next steps they're thinking about through taxes and those kinds of things. I think the administration has to be a lot more proactive to supporting domestic manufacturing of a lot of these critical items as well, making it more friendly to actually manufacture here in the States.
So, Mike, safe to say, just got 25 seconds left here, you would be opposed to increasing the corporate tax rate?
I'm going to stay out of the corporate tax rate, but what I would like to say is that we are very interested in the administration making it more friendly for the U.S. to domestically manufacture products.
Understood. Hey, Mike, listen, thank you so much and for going with the flow today, especially as we had to step into the president for his update on the COVID relief package. All right, Mike, thank you so much. Mike Alkire, he's president and chief executive officer at Premier on the phone in Dallas. We're just getting started. This is Bloomberg Business Week.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So over the weekend, I took my private jet to Anguilla, and then no,
Rude.
I didn't do
Rude.
that.
Thanks not for the invite. Wow.
I did not do that. I do not have a private jet.
But if you did, it would be like a 16-seater, and there would be room for me, right?
There would totally be room for you and for the family.
Thank you.
But somebody who has been taking a private jet down to island getaways is the CEO of Goldman Sachs, and this story is among our most read today.
Oh, it's just a fantastic story. Srinath Ranjan, finance reporter for Bloomberg News, going to be joining us in just a minute to give all of the juicy details, and there are a lot of them.
Oh my God, love this story. All right, let's get to Charlie Pellet with a check on some of your top business stories. Hey, Charlie.
Well, hello there. Goldman Sachs shares, they are trading lower today, down now by 1%. This on a day when the Dow, the S&P, and NASDAQ are all advancing technology shares, leading stocks higher as investors weigh the budding economic recovery and progress on vaccines against the risks of rising inflation. Apple pushing the tech-heavy NASDAQ 100 back on the plus side right now. That index is advancing. We have got the NASDAQ Composite Index up now by 0.7%, same as the NASDAQ Composite Index up now by 0.7. And just to clarify, NASDAQ 100 Index also up 0.7. S&P up 13 right now, a gain of 0.3%. The Dow up 88, up by 0.3. 10-year yield 1.60%. Gold up 0.2%, 17.30 the ounce, and a retreat for crude. West Texas Intermediate down 0.7%, 65.17 a barrel. Europe's biggest countries, including Germany, Italy, and France, have suspended use of AstraZeneca's COVID-19 vaccine amid a growing health scare that's creating yet another delay for the European Union's inoculation campaign. The decisions add to the list of governments that have halted the distribution of the shots following reports of serious blood clotting, even as the EU drugs regulator reiterates its support for the vaccine. Right now, ADRs of AstraZeneca, they're up by 0.4%. U.S., meanwhile, is reporting fewer new infections as the vaccination effort picks up steam. Dr. Joshua Sharfstein is vice dean at the Johns Hopkins Bloomberg School of Public Health.
Well, I just worry about maintaining this momentum. It's just really important for as many people to be vaccinated as possible, for people to really understand the value of vaccination, all the evidence that's behind it. I'm going out vaccinating, and when I'm at the Baltimore City Health Department's clinics, it is a joyful experience. People are just so excited and appreciative, and we just have to keep that story going.
And just getting word that Spain is now halting the use of AstraZeneca vaccine for 2 weeks. Again, AstraZeneca up by 0.4%. The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the other vaccine names today, Pfizer up 1.2%, BioNTech up 3.7%, Moderna up by 3%, Johnson & Johnson higher now by 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, so we've been talking about this. This is among our most read on the Bloomberg, and once we get into it, you are going to totally know why it's among the most read. It's about Goldman Sachs. It's about Goldman's modern CEO, David Solomon, and it covers everything, Tim, from empty offices to island getaways.
Even with a stop in the Hamptons along the way. Srinath Ranjan is finance reporter for Bloomberg News, joins us on the phone from New York. Sri, I'm so glad I get to talk to you again about this story. We spoke on Quick Take earlier today. Look, what do you think is the juiciest detail from what you learned about Goldman Sachs over the last year?
Tim, thanks. It's always good to talk to you, whether that's twice or more times in a day, and always great to speak with you, Carol.
Thank you.
And I'm just being nice because I'm hoping when you get your own jet, you take us along on your ride.
Yeah,
I will. I promise.
Look, on Goldman, honestly, I think the bigger picture is what's really important here. You have a firm that is doing, by all accounts, really, really well. The stock is at an all-time high. It's obviously a Wall Street-focused operation. It's one of the most premier investment banks out. It is the premier investment bank out there. Great trading performance, great banking performance, in part aided by the windfall from the pandemic that has helped so many other big banks with their Wall Street operation, then why is it that when everything is supposed to be good, there is still so much grumbling internally? And that's the question that we've tried to explore here. There's obviously some level of frustration with the CEO's leadership style. You see senior level defections, and at a time when there are numerous lucrative opportunities for successful Goldman executives outside of the banking space, and many of them seem to be taking up on that opportunity. And there is, without a doubt, the underlying theme of, and it's something that affects Goldman, but also every other large bank as we think about a wind down to the pandemic, hopeful wind down to the pandemic. We're also trying to figure out what the new normal will look like. How much flexibility will banks provide? And that's a key question, because that will play a big role in the kind of talent you can attract. So every company has to wrestle with it. And that has also been a source of tension inside Goldman Sachs because of what appears to be a hard-line stance of its CEO, David Solomon.
So, okay, so many different places we could go. But first of all, I kind of, put a note to myself, let's just start with the jet. Because is that normal? I feel like, Shri, if you go pre-financial crisis, a lot of corporations had their own private jet. It was the norm. I don't think we would finger point or anything. It was just the way CEOs got around. Is that the case for Wall Street? Was it that way, and has it not been that way? And so it's kind of a bit of an anomaly for Goldman?
I think it's an extremely fair point to make, Carol. Jets by themselves are not an anomaly on Wall Street. An executive's jet might be seen as normal, in fact. But Goldman Sachs long made a point of not buying one, not having its own private jet, because it was worried that the extravagance would invite public scorn. And even those who have it, it would be hard to sort of find cases where they've used it extensively for personal trips. And Goldman's only had its jets for a few months now. And from what we have been able to see in the records we've seen, it seems half of those trips have been these weekend getaways. But then you also have to juxtapose that with what is happening in the broader world right now. You have a firm whose CEO has access to the corporate asset to be able to escape to these getaways, while at the same time his subordinates and the public at large are still dealing with the rigors of pandemic life. That brings a whole level of strain, and when you know that your boss has access to these getaways and at the same time wants you back in the city, wants you back at the desk because he believes that is what will keep innovation going and that is what will make sure that the firm continues to thrive, there is obviously a bit of obviously a level of friction, and that messaging mismatch has to be addressed.
Listen, that tension you get into so well in this story. We can't go through it all, and it is really a must-read. As we said, it is among our most read on the Bloomberg, so I'll put it out on Twitter and highly recommend everybody go to Bloomberg.com and check it out. Shri, thank you so much. Shri Natarajan, finance reporter at Bloomberg News, joining us on the phone from New York City. And that's really that important point that he's saying, come on, I want people back at work, and yet he has the luxury to kind of jet off to different places.
Yeah, it's a great point. I want people back at work, too.
Yeah, I know. Well, they're slowly coming back, slowly. All right, let's get a check on world and national news. Over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. President Biden and Vice President Kamala Harris are kicking off what the White House is calling the Help is Here tour. The cross-country tour aims to make the case for the $1.9 trillion coronavirus relief bill that Biden signed into law last week. And Biden says he's appointing Gene Sperling, a White House veteran, to oversee its implementation. Sperling will work with the heads of the White House Policy Council and federal agencies to get funds out quickly and optimize their effectiveness.
We're going to make sure that the benefits of the American Rescue Plan go out quickly and directly to the American people where they belong.
Vice President Harris will begin the Help Is Here tour today in Las Vegas. Biden will travel to the Philadelphia suburbs tomorrow, and then both of them will travel to Atlanta on Friday. Well, now that the Biden administration has achieved its goal for more pandemic relief, the focus now could be on developing an infrastructure plan. Transportation Secretary Pete Buttigieg today spoke about it while visiting a UPS facility in the Washington suburb of Landover, Maryland.
conversations are taking place right now, as you've seen Oval Office meetings with the president and leaders from both parties, from both houses, and it's fair to say that in short order you're going to be seeing more.
Immigration is another issue likely to be addressed. House Republicans are visiting the southern border today as the country sees a surge in illegal immigration. Texas Congressman Tony Gonzalez hopes they get to see the good, the bad, and the ugly of his district. Members are touring the El Paso Central Processing Center for Migrants and also speaking with Border Patrol agents. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, so we were talking about that this is going to be a show of most reds. This is definitely among it, Tim.
Yeah, I love this story. Bill Ackman has given away $1.3 billion in Coupang after an early bet. He gave away shares worth more than $1 billion. This is the company is the e-commerce giant behind the biggest U.S. IPO since Uber.
Yeah, exactly. We know who Bill Ackman is, certainly familiar to our audience, the founder of Pershing Square, donating 26.5 million shares to the Pershing Square Foundation. It's a donor-advised fund, another nonprofit. He put this out in a tweet. That stake worth about $1.3 billion. I mean, this is a stock that shot up 41% in its trading debut. That was just Thursday on the New York Stock Exchange.
So it's sort of thought of as Korea's version of Amazon. It is still losing money. It's a familiar story for startups and even companies that do very well in the public markets. Investors don't need to see profits right away. Revenue, though, almost doubling last year as the pandemic boosted online shopping.
Yeah, exactly. And listen, there's a lot of big name investors, big billionaires who are benefiting as a result of that company going public. That includes, of course, we just talked about Ackman, but listen, one of the biggest winners is SoftBank's Masayoshi Son. His company owns the largest slice of Coupang. And then you've got Green Oaks Capital. It's the second largest shareholder. And then Rose Park Advisors. It's a VC firm co-founded by the late Harvard professor Clayton Christensen and his son. They also own a stake. So some really well-known, I gotta say, a well-known investment billionaire pedigree that is behind this name.
And a large portion of Ackman's wealth, according to the Bloomberg Billionaires Index, he's worth $2.2 billion. So to give away, more than $1 billion worth of the company's stock is a pretty sizable chunk.
That is pretty significant.
Yeah,
that is pretty interesting. And I do wonder, listen, there are tax consequences, I'm assuming, in terms of doing it and putting it into a donor-advised fund in terms of being able to do this.
Yeah.
Oh, it looked like you were going to say something.
Well, it's Ackman and his wife, Neri Oxman, have served as co-trustees of this foundation since 2019. At the end of September, it had $238 million in assets. That's according to a filing. We'll find out, hopefully, how much of this actual donation is going to the foundation.
Yeah, exactly. All right. Anyway, a big, big story. And again, among our most read on the Bloomberg Terminal. You're listening to Bloomberg Radio.
stocks, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie. Out of technology, leading stocks higher. Oil has paired its drop green on the screen with the S&P up now by 10, up by 0.3%. The S&P had been fluctuating between gains and losses, but right now looking at an advance. We've got the Dow Jones Industrial Average up 55 points, up by about 0.2%. NASDAQ up 87 now. That's a gain of 0.7%. The NASDAQ 100 index is up by 0.7. 10-year yield 1.60%. Gold now up 0.2%. Little change to $17.29 the ounce. And West Texas Intermediate crude down 0.5%, 65.28 a barrel. So again, recapping stocks higher. S&P up 10, a gain there of 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. March is Women's History Month, and Bloomberg Radio is looking back at some of the women who played a vital role in American history. Here with more is Bloomberg's Renita Young.
On this day in women's history in 1946, former First Lady Eleanor Roosevelt is appointed U.S. Representative to the United Nations. President Harry Truman appointed her. Roosevelt contributed greatly to UN policymaking, serving as chair of the Human Rights Commission. She was the only one serving on the person delegation that would eventually produce the Universal Declaration of Human Rights in December 1948. Now, because of Roosevelt's massive contributions to international human rights and law, President Truman would later call her the First Lady of the World. Roosevelt served in this position until 1952. That's today in women's history. I'm Renita Young, Bloomberg Radio.
All right, Renita, thank you so much. So right now, the current issue of Bloomberg Business Week features a deep dive into equality. It's all part of our enhanced and, kind of a reset we're doing on our equality vertical here at Bloomberg. It also coincides with the Bloomberg Equality Summit. This week, we've covered several of the stories in the magazine on our air in the past week or so, but one more we wanted to bring you, and this is about the news that exposed precisely how white and male some U.S. companies are.
Yeah, it's an interactive feature, so I highly encourage you to check it out on the website. Done listening to us. Joel Weber is editor of Bloomberg Business Week. Jeff Green is managing diversity reporter at Bloomberg News. Joel, talk a little bit about the presentation of this, because that is a big part of the story here.
Yeah, and to be clear, the magazine and me deserve very little credit for this one.
Same with me,
Jeff. We tried to make the team tried to make the interactive be the glory here, and we were able to take a slice of this and bring it into print because we thought it was such an important topic, and that is really like the heart of this thing was to actually look at corporate America and it does, as you would expect, it is very white, but to actually be Bloomberg and put data behind that and actually attempt to show progress was really what this project was all about. So Jeff, talk to us about how you went about getting this data, what it revealed, and what you're starting to watch as this is an ongoing project.
Yeah, I mean, I think the really key thing here is that when we first did this last year, 25 companies were agreeing to show us this data, which is not required to be released publicly. In fact, the Supreme Court has made it very clear they can't be compelled to do it, so it has to be voluntary. And so in this time around, we have 37, with another 30 promising yet this year to show. So among the S&P 100, the 100 largest companies in the U.S., a significant majority, by the end of this year will be sharing this data that they have been keeping private for decades. So, I mean, that's almost more interesting than what it's showing, which is kind of what we know, but in a way that now makes them much more accountable to it.
Well, talk about this, the EEO-1 form, because that's where some of this data come from, right?
Right, and this is very important for people to understand, because there were a lot of people said, why are you being such a stickler? Why are you saying EEO-1 or nothing? Well, what happens is every year, all companies with more than 100 employees, except during COVID, they've been delayed, but they will be doing it again basically next month, have to report the racial and gender breakdown of their workforce in detail. And it's very, very instructive of how to do it. So even if it's not shared publicly, there is an aggregate database of the entire workforce for the United States that we can see. And there's no such thing, there's no other source for this kind of information. So when a company gives us their individual form, we can compare them against their industry. We can compare them against the country. We can do things that you can't do with what people just throw up on their diversity page and say, this is what we're showing you. So.
Well, I always feel like the devil's in the details. The deeper you really dive into numbers, you really get a much truer picture. And it's really cool. Like as Tim mentioned, it's interactive. So you can put in Dow, Costco, Facebook, NVIDIA, and really get a good handle on how they're doing. Overall, though, when we do take that big, broad look, Jeff, how are companies doing? What are the numbers?
Well, I mean, it's kind of where we know they say they are, but in a much more detailed way. And it also just kind of shows how much diversity right now is sort of focused on Asian employees tend to be overrepresented in terms of where companies shift. If they're not, a lot of the companies that have given us their data actually are underrepresented in terms of white workers, but where they shift to is in Asian workers, especially tech, and Hispanic and Black workers. I guess the poorer employees are not faring as well. There's a few exceptions where you have companies that are maybe in the consumer space. You look at McDonald's and Starbucks have managed to move some of their employees from the workforce into the management ranks, but it really kind of shows us. If you look at it all as a big snapshot, which you can do with one of the graphics, kind of where everything falls out. There's very few companies that are overrepresented or even represented in terms of Black employees, for example.
Well, and that's interesting, Jeff, because it makes me kind of read between the lines here, because just in the wake of Floyd, social unrest, like it's almost like the companies, and these are the biggest companies in corporate America, now recognize that they basically have to put this out in the open and actually like confront it and not shy away from it. So what kind of tone have you been able to pick up on from the companies just in terms of their willingness to finally cooperate?
Yeah, I think there's very much a tone of like, okay, this doesn't look good, but it's better than being like cited as among the no's that won't share. Obviously, some companies are still willing to, stand by. They don't think this is a good measure. They have lots of reasons why they don't want to show this to us. But I think ultimately the momentum is against them now. And companies are basically saying transparency is is basically the cost of entry now to show that you're serious about this, where a year or two ago, the focus was on gender, which is a lot easier to show because it's one measure. This is a lot more complicated, and asking people to present this in a way that you can compare to other companies is key now.
Hence why we have this tool, and it's something that we'll continue to develop as we go forward. Jeff, we kept you busy in the issue. I also want to talk about the back page that you also wrote, which was about the diversity officer hiring spree. It's basically like within corporate America, they know they have this problem. They're trying to address it. What job, if you want to be an executive in corporate America right now, what's the best way to get hired?
Yeah, well, I mean, there are a lot of companies hiring chief diversity officers for the first time, and also kind of refreshing what their approach to it, which is kind of part and parcel with this. People want to show, they're showing their data, they're more willing to share, and they also want to show some sort of tangible evidence that they're trying to do something. I mean, the risk is that they'll hire a person and not put the resources behind it and not see the results, and then sort of say, see, I told you so. We tried, and nothing changed, which is kind of where the pressure is now, is to actually tie these executives and all executives to outcomes. And so you're seeing a lot of companies bring in their first chief diversity officer, but they're now reporting to the CEO as opposed to maybe through HR in a couple levels.
Yeah, it's definitely been upped. Listen, those are the both stories, just really, really smart and full of lots of information. It's in the current issue of Bloomberg Businessweek magazine. Jeff Green, thank you so much, of Bloomberg News, along with Jill Weber, the editor of Bloomberg Businessweek magazine. You're listening to Bloomberg Businessweek. Carol Master, Tim Stanovic. This is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. We move into the final hour of trading on this Monday, March 15th. It is an up Monday. Technology shares leading stocks higher as investors weigh the budding economic recovery and progress on vaccines against the risks of rising inflation. Apple pushing the tech-heavy NASDAQ 100 into positive territory. Utilities and real estate lifting the S&P 500 into the green. Energy, financial sectors remain lower. S&P up 12 now. That's a gain of 0.3%. The Dow's up 67, up 0.2%. NASDAQ is up 92, higher by 0.7%. The NASDAQ 100 index up 0.7%. Russell 2000 up 0.1%. And Dow Transport's up by 0.2%. The Philadelphia Stock Exchange's semiconductor index, otherwise known as the SOX, up now by 1.8%. 10-year yield 1.60%. Gold is up $2.39 the ounce, higher by 0.1% at $17.29, and a retreat for crude down 0.6%, $65.23 a barrel. Bank of America is confident in its growth prospects even as competition intensifies from fintechs, including Walmart's startup. That from CEO Brian Moynihan, interviewed on Balance of Power today. He talked about a number of other topics, including the outlook for the economy.
You know, the team is at 6.5% in a huge economy. You know, in the U.S. growing faster than the world economy is predicted. They got 5 for the world. If you think about that, that is a pretty powerful engine that has already recovered about 95 to 97% of where it was, and now is growing at 3 times the rate. That's a pretty powerful prediction, and our team is quite convinced it's all there.
The airline stocks flying higher on improved prospects. JetBlue up 6.1%, UAL up 9.2%, American up 7.4%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Thank you, Charlie Pellet. This portion of Bloomberg Business Week is brought to you by SEI. Since its founding 50 years ago, SEI has provided investment managers and asset owners with robust infrastructure platforms and flexible outsourcing solutions. Go to seic.com/IMS.
All right, you're listening to Bloomberg Business Week, as Tim mentioned, and let's get into our next guest because, listen, we keep a watch on Bitcoin every day. It did drop back a little bit today after scaling a fresh record on bets that some of the pandemic relief payments in the U.S. will end up chasing the digital tokens towering rally. We've been writing about that and also writing about Bitcoin in his weekly column. He tackles maybe how central banks get into the cryptocurrencies. Let's bring in Bloomberg New Economy editorial director Andy Brown. He's with us on the phone in New York City. Andy, good to have you here with us. I feel like Bitcoin is one of those things, as we continue to watch it take out level after level, there's either people who are all in on it or people who don't like it at all.
Yeah, well, you know, just looking into the whole issue of cryptocurrencies and Bitcoin, it strikes you how shockingly retrograde this whole thing is, right? I mean, you know, you start with the environment. I know this is a terribly unpopular thing to say with Bitcoin enthusiasts who will argue against it. The truth of the matter is that Bitcoin, in producing Bitcoin, requires massive amounts of computing power. And according to the analysts, researchers at Cambridge University, it equals the carbon emissions equal to the entire output of Argentina. Okay, wow. So it's terrible for the environment. In terms of a medium of exchange, it's really super inefficient. Now, there are layers that are being built on top of Bitcoin, but right now you can do about 4 or 5 or 6 transactions every second versus literally thousands that are done by Visa and MasterCard. So it's clunky. Janet Yellen was just the other day saying this is extremely inefficient. And then as a store of value, I mean, this time last year it was trading at something like less than 10,000. Now it's up, as you say now, hitting new records. So, you know, in terms of what it is, and of course nobody actually knows what value it represents beyond scarcity, right? So right. I mean, basically it's a string of software code. And there's this artificial scarcity because only 21 million Bitcoin will ever be produced or mined, as they say. And yet it actually does represent right now a very fundamental threat to central banks. And central banks are really scrambling to come up with a response to this thing. And it does seem as though China is at the forefront of the response to this challenge by coming up with a central bank issued digital currency. And again, you know, this is something that banks are now looking at. They didn't want any part of cryptocurrencies, but they're being forced to respond. Janet Yellen the other day said, well, yeah, actually, you know, maybe a digital dollar would be a good idea. Maybe it would facilitate payments and so on. You know, and kind of the thought is that the real irony here is that, you know, the people who invented Bitcoin, this was very much a libertarian experiment, a radical experiment in peer-to-peer money. You took out the middle person, right? The banks, the monetary authorities. What would, you know, the unintended consequences of this may be that that they're going to spur the creation of these ultimate top-down currencies issued by monetary authorities, central banks, all over the world. And actually, you know, that may not be such a terrible thing, to the extent that, you know, you could really blur the lines between monetary and fiscal policy. In China, they're talking about, you know, using central bank issued currency, for instance, to, you know, issue helicopter money to businesses, right, to individuals, right, unlimited QE for the masses. You know, and it's just something that they're actively considering. This isn't some kind of wild theory. This is a practical application that they're talking about in China now.
It's fascinating, like you mentioned, Janet Yellen, the 180 that she's done. But you do talk about China, and listen, since we have you, we've got to ask you about all of the headlines, the flurry of headlines, including one this morning coming out of China about the Chinese government asking Alibaba to sell media assets. You know, we are seeing increasingly, Andy, this campaign to curb the influence of China's technology moguls. We continue to see that expand. What's the end game, and what does this ultimately mean in terms of, especially China's plan to be operating on a more sophisticated kind of industrialized scale?
Yeah, you know, look, I think you can look at this in two ways. I mean, one way is clearly they're launching the mother of all antitrust investigations now into Alibaba. It looks as though this is now going to spread from Alibaba to Tencent. And so you could say that, you know, as they're going through Alibaba's businesses, trying to figure out ways where it is abusing its monopoly or perceived to be abusing its monopoly, now they're taking a look at the whole issue of media. And so according to the Wall Street Journal, Alibaba may have to divest its media assets. You know, the other way I look at this is, you know, from a political perspective, I would say this is deeply negative and deeply troubling for Jack Ma, because in China, you know, media is, of course, they're saying, oh, you know, we're in media not because we want to control the message, you know, not because we want to have political influence. This is all about leveraging technology to help media companies. That's not the way regulators look at it at all. As far as they're concerned, media is politics. Media is propaganda. Propaganda is shaping public opinion. And as far as the party is concerned in China, that is a central plank of the way it holds power and perpetuates its rule. This is deeply now a deeply political turn that the antitrust investigation against Alibaba has taken.
Yeah, listen, and it just feels like almost every morning or every day or every week that there's another headline against one of the major Chinese players. Andy, thank you so much. Really appreciate it. Bloomberg New Economy editorial director Andy Brown with us on the phone in New York City, because I was thinking about Tencent. Oh, was that last week?
Yeah, it was. And as a result, it was last week. And as a result, you see shares slide, you know, the ADR slide here in the U.S., which makes sense. But you have to wonder about to what extent does that start to affect the way that the country thinks about those companies?
Yeah, absolutely. And as an investor, how do you think about it then in terms of investing in that country? All right, let's get back to world and national news. Over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol, President Biden is launching his Help is Here tour this week, hoping to explain to the American public what's in the $1.9 trillion American Rescue Plan. Today, he announced White House veteran Gene Sperling will oversee its implementation.
Over the next 10 days, we'll reach two goals, two giant goals. The first is 100 million shots in people's arms will have been completed within the next 10 days, and 100 million checks in people's pockets.
Biden heads to Pennsylvania tomorrow, while Vice President Harris will go to Nevada and Colorado. Then both will head to Atlanta on Friday. As the Biden administration works to have more people vaccinated, it's come to light 25% of House members have yet to receive a shot. Bloomberg's Amy Morris has more from Washington.
All Congress members were offered the vaccine back in December. The White House National Security Council says they took the action to ensure continuity of government operations. But last week, as lawmakers debated when to fully reopen the House, it became clear only 75% of representatives have gotten their shots. Axios reports the Office of Attending Physician can't recommend relaxing or changing the social distancing guidelines until it's clear why those members aren't vaccinated. In Washington, I'm Amy Morris, Bloomberg Radio.
The favorability rating for embattled New York Governor Andrew Cuomo is heading lower. A new Siena College poll indicates it's dropped to 43%, matching his lowest ever as he faces an impeachment investigation into allegations of sexual harassment. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you, Nancy. So over the weekend, Carol, I saw on Twitter that a lot of people were talking about whether or not they received stimulus payments. Now, according to the Biden administration, the stimulus payments should start hitting checking accounts soon. The IRS says they'll go into bank accounts on Wednesday. And some financial organizations have given people access to those funds already, even though the IRS hasn't sent the money yet. So one of the organizations that has done that is Chime. And earlier today, I spoke with Chris Britt. He's the co-founder and CEO of the fintech startup. It's worth more than $14 billion. Wow. Check out what he had to say.
We believe that, payments should be fast and easy and free. And when we see through the ACH system that funds are scheduled to arrive from the federal government later this week, the moment we got that notification through the Fed, we decided to make those funds available. And like you said, we've already made available over $3.5 billion of payments to over 1 million Chime members. And it's really helped them when they needed the money most.
So are you making the funds available before you actually get the money, or the banks get the money from the IRS?
Yeah, our bank partners are making those funds available. When we see, if you think about the way the ACH system works in America, there's oftentimes a pre-notification that money will arrive. And then ultimately, a few days later, the money settles with the bank. We do this not just in the area of stimulus payments, but in payroll, direct deposit payroll from your employer every month. So we're actually making available billions of dollars, over $3 billion every month to Chime members who get direct deposit of their paycheck as well.
So Chime has something that's called Get Paid Early, and it's when Chime customers sign up and they get direct deposit, they can have access to the funds that do get direct deposited early, just as a function of the bank or the financial organization actually knowing that they are going to get that money.
They know it's coming.
Exactly, and they did the same. So if people get that already for direct deposit for work, then they know their stimulus is coming, they can do it for stimulus too.
Really interesting business model. Again, that was Chris Britt, co-founder, CEO of Chime. Check it out at Bloomberg.com.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. Stocks higher across the board. 43 minutes to go ahead of the closing bell. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks are in the green after overcoming some early weakness. Dow is currently up 34 points. S&P has gained 9, and NASDAQ is now higher by 85. The U.S. 10 yield at 1.6%. Gold is little changed, and transports rise 17 points. Among the main 11 S&P sectors, leaders were utilities and real estate. Energy, financials, and materials were in the red. Leaders to the upside in the Dow, Walgreens and Nike, while Dow Inc. fell 2.4% and led to the downside. In other news, Biogen fell intraday after cautious comments on a Jefferies call. GameStop, with another intraday plunge, is currently down 12%, and Germany suspended AstraZeneca's COVID vaccine. Wrapping things up, airlines were strong today, led by United's 9% gain. Live from the First Breaking News Desk, Charlie.
Okay, we thank you very much, Bill, and to hear live breaking news over your Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So listen, we have enjoyed checking with some of the big banks. It's been a great way to feel kind of where we're going in terms of the financial markets, the global economy. We recently caught up with JP Morgan Chairman and CEO Jamie Dimon, right? We talked to him, well, we didn't, but Ed Hammond did.
Yeah, we learned a lot about how he feels about people coming back to the office. He's eager for that to happen.
Yeah, and listen, today, these are some of the questions that came up when Bloomberg's Balance of Power host David Weston caught up with Bank of America Chairman and CEO Brian Moynihan. They talked about a bunch of things. Here's a little clip of that interview where Brian Moynihan shares his thoughts on the U.S. economy and bond yields. Check it out.
Is it possible we may be overheating the economy? Because we also have been increasing the money supply. I think it's up something like 25% year over year, the M2. It's been held down, the inflation, because there hasn't been much velocity because people are at home. What happens when they come out of home? In fact, some of those depositors you talked about that didn't spend all their stimulus checks, they have it sitting there in their bank account. Are you worried we could get inflation that would be troubling?
Well, that's part of the discussion you see in the market. But let me just tell you what we're seeing in our customer base, David. It will help you think about that. If you think about last year up till March 9th or 10th, that was before any activities had taken to shut down. And we were all hearing about this virus and learning about it. It was really the March 15th and out where people started taking, at the government level and the employee level, significant actions. If you look at that period of time, 2020 over 19 grew, double digits, say 10%. When you look at it, 20 to 21, we're now growing at 6%. And if you look at it for the month of March, for the first part of March here, it's actually growing above 10%. That's pretty unbelievable. And what you're frankly seeing now is the credit card charges, which had been depressed because it's a lot of travel and entertainment, are back and actually growing year over year. Growing year over year at a time pre-pandemic shutdown. And so you're going to see massive year-over-year comparisons as you move into April when everything was shut down. So the reality is the consumers at Bank of America, which is 50 million people spending $3 trillion plus a year in all these different forms, are spending more money than they did last year and growing at 10%. And that was before the pandemic. That bodes well. And then if you look at the charges, you can see like on a credit card, the seniors and boomers are getting vaccinated. We're up 50% in charges over the last few weeks in terms of travel and related things. You're seeing the TSA statistics. So the types of things are happening. Now, by the way, grocery stores are down a little bit. Why? Because people shifted more to restaurants. And that's all bodes well for normalization of the economy. So we see that very good. Does that overheat the economy? I think you've heard it from Chair Powell in many cases. They're willing to take the risk to get the average inflation rate above 2%. There are people concerned in the market. We all have that concern because inflation's tough to fight if it gets embedded in there. But there's a lot of temporary factors, and we'll see what happens. And I think you'll hear the Fed's most recent economic projections over the next few days, and we'll see what they say. But our economists have raised their projections from 4% to 6% in really 90 days. And I think, likewise, other people will do so.
Well, and Brian, that's part of what I want to ask. You referred to the 10-year yield of being over 1.6 now. And historically, as you point out, that's not that high, goodness knows. But it went up very fast. And some people think it's on its way to go higher than that. Are you concerned about the rapidity with which it's going up? And by the way, where do you think it ends up?
Well, our team basically thinks that it's going to potentially go through 2%, and we'll see. But it's the reason it's going up is because people are seeing the economy recover. At the end of the day, this was a healthcare crisis, and we had to win the war on the healthcare crisis. It's the first way that I thought about it, and I've thought about it ever since. We have to win the war against this virus, and they have done that. And they haven't completed it yet, but we have the pieces in place. The vaccines are a game changer and are being deployed, 100 million shots in arms, which is unbelievable, 30 million sitting on shelves that need to be deployed, and then many coming after it. So I think there's concern about that. I think it'll play out a little bit, David, and I think we have to watch it. But it went up, but it's still back to where it was, only a few months before when it fell, down into the 60 and 80 range. And so I think people have to be careful about these movements are just to get it back in line with where it was, even at a very low level. If you don't look in the last decade and then go back from 2007 backwards and try to count the number of days a 10-year traded below 3%, you won't find a lot. And so as the economy normalizes and the growth rate comes up and we get above 2%, I think you'll see a little higher rate, but it'll still be, in the grand scheme of things, one of the lowest rates we've seen in a long, long time.
Yeah, that's a little bit of perspective from Bank of America CEO Brian Moynihan, catching up with Bloomberg's Balance of Power anchor on Bloomberg TV and radio, David Weston. Listen, when it comes to yields, it's very easy for everyone to kind of get a little nervous as we see the uptick, especially in the 10-year, how dramatic and how quickly it happened. But let's remind everybody, historically, we are still at really low rates.
Yeah, and go back and look at mortgages, for example, from the 1980s.
Exactly.
Yeah, we are in a completely different place. Carol, I want to hit on this, what Moynihan talked about when it comes to different consumer spending that the bank has seen over the last few weeks. Wow, what insight they have into the way that people are responding to vaccinations, right? Up 50% in charges over the last few weeks. That's travel type of charges, Moynihan said. Grocery stores are down, but restaurants have gone up as people have gone vaccinated. A nice little preview for how people are changing their behavior when they get vaccinated.
Listen, I love companies like this. Any of the financial companies, any of the credit card companies, you automatically, they know month to month exactly what consumers are spending money on, where they're holding back, where they're spending. And it really gives you kind of a window into the psyche of the American consumer. Do they feel comfortable spending money? And if so, where are they doing it?
He used this phrase, this return to normalcy, right? People spending less at grocery stores and more on restaurants. And it was so nice to hear.
Yeah, exactly. And I think it's, ultimately, too, though, he says it comes down to us winning this war against COVID. And I feel like many of the CEOs that we've talked to said, listen, unless we get this under control, nothing gets back to normal.
And not too concerned about the economy overheating either.
No, exactly. All right, again, Bank of America CEO Brian Moynihan. Catch that entire interview at Bloomberg.com.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Going down private equity memory lane.
It's been a few years.
Tim and I have been doing a little researching and Googling. And that's what we're going to do, too, when we get to the chart of the day.
We are. We're going to Google who the song of the day artist is. Or maybe we're not. Maybe we're going to get it.
Oh, wouldn't that be sweet? I wonder if it's going to be something from the Grammys last night. All right, we're going to get to Dave Wilson and his chart in just a moment. Right now, let's get back to the trading day. Charlie Pellet, 29 minutes to go, Charlie.
Indeed, and holding on to those gains, Carol Master with the Dow, the S&P, NASDAQ, all advancing technology shares, leading stocks higher as investors weigh the budding economic recovery and progress on vaccines against the risks of rising inflation. Apple, Tesla, Facebook pushing the tech-heavy NASDAQ 100 into positive territory. Tesla up 1.4%. Today we've got Facebook up 1.8%. Apple up now by 1.9%. The NASDAQ 100 index up 0.5%. NASDAQ Composite Index also up by 0.5%. The S&P 500 index up 5 right now, up 0.1%. The Dow's up 23, higher by 0.1%. 10-year yield 1.60%. Gold is up 0.2%, $17.30 the ounce. West Texas Intermediate crude down 0.5%, $65.31 a barrel. Europe's biggest countries, including Germany, Italy, France, and now Spain, have suspended the use of AstraZeneca's COVID-19 vaccine amid a growing health scare that's creating yet another delay for the European Union's inoculation campaign. UK officials, meanwhile, saying it remains, quote, safe and effective. AstraZeneca shares up right now by 0.4%. The U.S. is reporting fewer new infections as the vaccination effort picks up steam. Dr. Joshua Sharfstein is Vice Dean at the Johns Hopkins Bloomberg School of Public Health, and on Bloomberg Radio and Television this morning, he addressed the issue of vaccine hesitancy.
People may have political views, but they also may have questions about the vaccine, and I think it's just really important for there to be good access to information, a lot of outreach. I think a lot of people are in the wait-and-see mode, and when they see their friends and family so happy, so joyful, able to do things with more confidence, I think more people will be vaccinated regardless of their political persuasion.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names, Pfizer up now by 1%, BioNTech, the German partner, up by 3.9%, Moderna is up 4.3%, Johnson & Johnson up now by 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. This is Bloomberg. Taylor Swift.
Right, he passed away. Yeah. And I'm thinking, I wanted to...
the guitar player.
Right, exactly. And why I can't think of who it is. Yeah. Van Halen. Yeah, it's Van Halen. Yeah, very good, Tim.
I mouthed it to Carol.
We're both like having a Monday brain moment, which was a very poignant moment on the Grammys last night when they had his guitar. They were doing kind of all of people in the music industry who'd passed away, and they showed his singular guitar on a chair. It was very sweet.
And played a few short moments of his famous instrumental called Eruption.
Yeah, well, that I did not know, but you did.
He died a few months ago.
Yeah, and young. All right, so thank you for doing that. I was hoping you were going to do something from the Grammys. Does it tie in also to your chart?
In a manner of speaking, standing on top of the world, if you're a stock investor or a mutual fund investor, you might feel that way these days. And, if you're a typical American household, or at least an average one, it would matter.
I never want to be an average household. Who wants to be that average household?
I don't know.
You know what I mean? You know what I mean.
In any case,
okay.
it comes down to sort of an analysis of wealth. You know, the Federal Reserve does this quarterly report, you know, financial accounts of the United States, and inevitably people go through the numbers and come up with all kinds of, you know, conclusions about, you know, what's happening in this country. And what's happening when it comes to U.S. households is that more than ever before, and this data goes back to 1946, Americans' wealth is tied up in stocks and mutual funds. When you put the two together, they account for about 34.5% of net worth for households. And you've never seen a percentage that high. You know, even in 2000, you know, when the bull market of the 90s was peaking, it didn't get up quite so far. And, you know, this was a chart that in Hedgeopia, it's a financial blog. They have a Twitter feed, and they put it out, and I was able to reproduce it. It's, if nothing else, it shows you what's at stake as stock prices fluctuate, and the short answer is more than there has been in the past, at least from the standpoint of Americans and their wealth. If you want to know more, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
So, Dave, is this a good thing, net, be that more Americans are participating in the financial markets?
You know, the thing is, you know, it's kind of hard to know whether what you're asking is really represented in the data.
Right.
You understand what I mean? Because, you know, it's a greater percentage, but it may be, you know, similar in terms of the actual number of households involved. It's just that, you know, the rising tide lifting the boats that are out there, not, you know, not necessarily broadening out stock ownership. So, you know, that's the tricky part. And, you know, when you get into discussions of, you know, wealth inequality, I mean, that's certainly a part of the mix.
So it shows a concentration. We just don't know if it's whether or not it's a concentration of relatively small number of households owning a large portion, or if it's actually evenly distributed, right?
Right, that's the trick. I mean, it's one thing to see the percentage go up. It's another thing to sort of understand how that's distributed.
Yeah, I also wonder too, is longer term, is there a guaranteed kind of propping up of the equity markets? Because increasingly individuals' retirement is going to be the stock market, right? Because we don't have pensions, we don't have a lot of companies that are providing any kind of help and assistance. And I do wonder, Dave, like longer term, whether that just provides a floor and it's to the benefit of more and more Americans in their retirement that the stock market goes up.
Yeah, absolutely. And, of course, lately the issue has been you can't make a whole lot on bonds, so people have had more incentive to put their money in stocks. As interest rates rise, you got to wonder if that equation is going to change or perhaps influence these sort of figures.
Right, that's when you start to look between the fixed income versus equity yield. Hey, Dave Wilson, thank you so much. Dave will be back a little bit later on with his Stock of the Day.
Let's get a check of world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey there, Tim. President Biden is hitting the road this week to pitch his American Rescue Plan to the American public. He's also appointed a former White House economic advisor, Gene Sperling, to oversee the disbursement of the money in the package.
It's an assignment he took on for President Obama after the financial crisis. President Biden recalled with constant communication with local officials and barely a trace of wasted money.
Gene's been here before. In fact, he's already hit the ground running. A source of constant communication, a source of guidance and support, and above all, a source of accountability.
The president responded to one question on whether Donald Trump should publicly promote vaccination. He said the most effective communicators would be local medics and local clergy. In Washington, Irv Chapman, Bloomberg Radio.
The judge overseeing the trial of the former Minneapolis police officer accused of killing George Floyd is being asked for a delay. This comes after Floyd's family agreed to a $27 million settlement with the city last week. Derek Chauvin's defense attorney is expressing concerns news of that settlement could impact potential jurors. Well, Mank leads the pack for this year's Academy Awards with 10 nominations, including Best Picture. It's about the man who wrote the screenplay for Citizen Kane.
Herman Mankiewicz, New York playwright and drama critic.
The other films vying for Best Picture are The Father, Judas and the Black Messiah, Minari, No Man Land, Promising Young Woman, Sound of Metal, and the Trial of the Chicago 7. The 93rd annual Oscars will be handed out on April 25th. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, speaking of Googling, I've just Googled Master of Coin.
What do you see?
Game of Thrones wiki.
There
Master
it
of
is.
Coin is a royal official in the government of the Six Kingdoms. The holder is a member of the monarch's small council, the inner cabinet of the realm. I could go on.
Well, you're talking about this because there is a Tesla tie-in here. Elon Musk is adding Techno King of Tesla to his title, and the CFO, Zach Kirkhorn, is going with Coin Master.
Love it.
We're outing ourselves not really as like huge Game of Thrones
Yeah.
aficionados, right?
We're
Like, I
nerds
haven't
on a
seen-
certain level, but apparently not nerdy enough.
No,
or not
there's
cool enough,
still
something like that.
Plenty of time in lockdown for me to, watch all and read all the books, I guess.
Yeah, I'll probably in a rocker someday. I'm like, let's now watch Games of Thrones. But listen, and apparently they put it out, I guess, in tweets, I think is how they did it, right? Oh, no, actually it was a regulatory filing that these titles were done. Both still, though, alas, both will still maintain the positions of CEO and CFO. So it's kind of interesting. Listen, this is why on my tweet deck, I'm tracking my homepage, I'm tracking mentions, and then my next user is Elon Musk.
Hey, this is why Tesla doesn't have to do any advertising, because stuff like this happens and everybody talks about it. But there was some actual news coming out of a different filing today.
Mm-hmm.
The company said that Jerome Gillen, who's been president of automotive since September of 2018, transitioned last week to president of trucking. Musk first showed a semi-prototype in December of 2017 and said at the time that Tesla would start production in 2019. Now it's planning to start deliveries by the end of this year. Here we are in 2021.
Yeah, so listen, what we love about these filings and this information, especially like the heavy trucking business of Tesla, and it's not the first time that they put out, like, we're going to do this by this time, and then all of a sudden the calendar gets pushed out. We've seen this before.
And investors used to care.
And they used to care, but, and then all of a sudden Tesla was hitting a lot of marks, right? And so people feel pretty confident. But it does give us an idea as this business continues to spread out, kind of maybe where we're going, and we'll start to see maybe some numbers when it comes to trucking.
And it's also Elon Musk having a little fun with us in a regulatory filing, right?
You are master of coin. This is Bloomberg.
Facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. We're seeing a move higher right now for stocks, trading at or near session highs. In fact, right to the numbers, we'll give you the why in a moment. With the S&P up by 13 right now, that's a gain of about 0.3%. The Dow is up 92, higher by 0.3%. NASDAQ up 94 points, higher by 0.7. The NASDAQ 100 index up now by 0.8%. Technology shares leading stocks higher as investors weigh the budding economic recovery and progress on vaccines against the risks of rising inflation. 10-year yield 1.60%. Gold is up 0.2%, $17.30 the ounce. And West Texas Intermediate crude down 0.4%, $65.34 a barrel. So stocks higher across the board. Technology leading the way. I'm Charlie Pellet. That is Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just about 11 minutes left in the Monday trading session, the Ides of March.
Oh, it's happening.
It's happening. Hey, let's bring in JJ Kinnan. He's Chief Market Strategist at TD Ameritrade, joining us once again on the phone from Chicago. Are you spooked at all?
Hey, Carol.
Hi.
Am I spooked? No, not at all.
Well, that's good to hear.
We're saying the Ides of March, a
Yeah.
little nervousness here.
Well, it is funny, though, isn't it? As we set new records on Friday, if I were reading the, press over the weekend, not knowing what happened, I would think that we were in the middle of a terrible, terrible stock market right now.
Wasn't that crazy?
It really is amazing how many people are just waiting for the fall, so to speak, as we continue to rally.
Well, are they right to feel that way? And here I am looking at the last few minutes of trading today, and we're seeing another leg up on the major equities. So we're seeing buying into the close here. But are investors, are individuals right to be a little nervous? Maybe it's not even a this year's story. Maybe it's a next year's story.
Well, I think, you bring up a great point. Part of it should depend on your time frame quite a bit. But I do think that a healthy pessimism is always a good thing when you are investing. There's no question about that. But you can't stop it. You can't let that stop you from investing in quality names that are doing well. And as we talk right now, we're seeing bonds rally quite a bit as the S&Ps rally quite a bit. I think the thing that maybe people should be concerned about at the moment is that the relationships are still a little bit askew, and I would expect that to continue, and I would expect actually volatility to continue for at least till the end of the month, and certainly this week as we have quadruple witching expiration on Friday. And so it'll be interesting for me to see how many people are sort of rolling positions forward, or are people going to have the same enthusiasm for the summertime as they've had for the first quarter of the year.
Well, speaking of enthusiasm, our colleague David Weston spoke with Bank of America's CEO Brian Moynihan earlier today. And one thing that struck me from part of that interview that we played right here on Bloomberg Radio is when he talked about consumer spending and credit card use and the way they were rebounding really strongly, seeing significant shifts after people get vaccinated. And April data will probably show, quote, massive growth compared with 2020. What kind of preview does that give you for what things look like on the other side here? And what is that? And how much of that is priced in already in stocks, right? How much of that optimism is already priced in?
Well, I think, Tim, that's really going to be the question that we hit, in my opinion, out a couple of months. And the reason I say that is at the same time that you're talking about that, you're also getting checks going in the mail this week, so people get excited about that. But where I think the real test comes is, I believe it's right after May 1st, we're also, every adult's supposed to get vaccinated. So let's say we come to June What happens then when people who have been at home for close to 18 months in many cases, we'll call it between 12 and 18, productivity, as they say, has never been higher, creativity never been lower, because people have been working so much, but not in groups. And everybody has a bunch of vacation time saved up. What I'm worried about, to be honest with you, is third quarter GDP, because you may come to the situation where so many people say, I'm going outside. I don't care. I just want to enjoy life for a little while because I haven't really done that. And I know, I say it kind of smirking, but I do think it's a real threat to things for a quarter, because I really feel like, and you live in New York, I live in Chicago, we know how precious nice weather is, and I think that that's a risk to the economy.
But maybe that would manifest in other consumer spending, right? If we think about it from the perspective of the way that we hit up hospitality, right? Travel and leisure. Like, that could be a boon then.
That could be a boon. I believe you're absolutely right. And actually, theoretically, I think it could be a boon for the energy market, to be quite honest also. But that also has longer-term effects. And so I think that if you see GDP start to come down, even if it's just for a quarter, then it's, okay, how do we recover from that? Because hopefully we don't need any more stimulus after this one, et cetera. And if that's at the same time as we start to see some tax proposals, that's the only thing that actually concerns me longer term.
Yeah, but we seem to somehow manage our, I don't know, no offense, but I feel like companies figure out a way in terms of their effective tax rate to actually, despite a actual tax rate that they're supposed to pay, they ultimately pay a lot less, JJ. So it's not so onerous on the corporate community, bottom line.
No, that's true, Carol, but I just mean spending in general, et cetera. Again, I think it's great when, people have this optimism, and there's incredible optimism right now, and love to see it. And like I said, even though, reading a lot of the reports of the market, you wouldn't know there's an incredible optimism, but days like today make me believe there is. I guess what I'm really saying is, I think anybody who believes sort of this shorter-term volatility is going away is probably a little bit kidding themselves, because there are things to worry about in the shorter term. But as we look for the rest, certainly for the rest of next quarter, I just feel like we have a lot of momentum. We have checks hitting. We have people anxious to spend money. It's the second half of the year that I start to wonder about a little bit. And can we continue with this great optimism through?
All right. So having said that, then, how do you position a portfolio at this point? What's your take?
Well, I think, financials have been a great contributor to the market so far this year. Have to be the area, they fought for so many years the headwinds, and they were like a great boxer that wouldn't go down and kept getting punched in the face. And now with the way they managed their business, the ability to collect funds, and now they actually have true banking functions, hopefully back, and a little bit of a spread, even though, again, I know I'm talking about a 10-year rate at just over 1.6 as if it's unbelievable. But right. Let's face it, in perspective of historical, it's nothing, but the trend's in the right direction for them. And I think, Tim, you hit on something important a few minutes ago, and that is the hospitality industry. Small businesses all the way through these stocks and airlines. So I do think they have a great opportunity. The only thing that I think puts a little bit of a crimp in there, and I don't know it'll slow it down in the short term, is actually if crude oil prices continue up above 70. As we speak right now, West Texas is 65.38, but if we get above 70, I think that puts a little bit of expense perhaps back on airlines, et cetera.
JJ, in 5 seconds, is there a 10-year yield number that scares you?
2%.
All right, well, there it is.
All right, we're watching. All right, folks, just a few minutes left in today's trading session. Equities, they have just taken another leg up. They are going to finish at their best levels of the day. We've got closing numbers in just a moment. You're listening to Bloomberg Business Week. This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. Records for the Dow Jones Industrial Average, a record for the S&P 500 Index. Folks from Anheuser-Busch and singer Travis Scott ringing that closing bell at the New York Stock Exchange. Up day on Wall Street, stocks rallying across the board. Late day rally into the close there. The Dow, the S&P, and NASDAQ all higher. Tech shares led the advance as investors weighed the budding economic recovery and progress on vaccines against the risks of rising inflation. S&P 500 Index up 25 points. That's a gain of 0.6%, a record. The Dow up 173, up 0.5%. That too a record today. NASDAQ up 139, a gain of 1%. The NASDAQ 100 Index up by 1.1%. 10-year yield 1.60%. As for the economic outlook, J.J. Kinahan is Chief Market Strategist at TD Ameritrade moments ago, right here on Bloomberg Business Week. He raised the point about vaccinations and what happens when we get to the other side, potentially with herd immunity.
Well, say we come to June. What happens then when people who have been at home for close to 18 months in many cases, we'll call it between 12 and 18, productivity, as they say, has never been higher, creativity never been lower, because people have been working so much, but not in groups. And everybody has a bunch of vacation time saved up. What I'm worried about, to be honest with you, is third quarter GDP.
Gold up today by 0.3%, $17.31 the ounce. And West Texas Intermediate crude down 0.3%, $65.40 a barrel on WTI. Among some of the consumer names today that have attracted a lot of attention on chat boards, GameStop plunging 16.8%, AMC Entertainment up 25.8%, Cost shares up by 3.7%. Recapping records on Wall Street, S&P up 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Wild thing, think you move me. I got a few moves I know you'll like.
Shaking all over.
Bloomberg Business Week. Movers and shakers.
Shaking, not stirring.
On Bloomberg Radio.
Yeah, let's do some moving and shaking on this Monday. Carol Master, Lauren Stanovic in our Interactive Brokers studio. Charlie, given those closing numbers, folks, and as he mentioned, records on the S&P and Dow finishing at our best levels. It's really fascinating to pull up the charts. I know you can't do that on radio, but if you could, you'd basically see kind of a straight line up in that last 30 minutes of trading. So really a lot of buying you could see certainly into the closing bell on this Monday. If I take a look at the S&P 500, 368 names in the S&P 500, Tim, higher today, 136 lower, one unchanged.
As far as taking a deeper dive into the S&P 500, looking at the Bloomberg Industry Group's utilities led the pack today, higher by 1.36%. Real estate higher by close to 1.2%, as was consumer discretionary. Information technology also higher by over 1%. There were a couple laggards in terms of industry groups today. Energy led the way lower, down 1.3%. Financials down 0.6%.
Yeah, so pulling off a little bit. Charlie, talking about some of these names throughout the last few hours. Airlines overall rallying as improved summer leisure bookings and rising fares offered strong signs of a recovery 1 year after Americans began staying close to home. So UAL was up more than 8%. American Airlines was up 8%. You're looking at me like, yeah I'm ready.
Well, look, I got to tell you, anecdotally speaking, to people who have received that second dose and are getting close to 2 weeks out from that second dose, they are already booking plane tickets. I'm talking about my mother and father-in-law.
Already?
They're booking plane tickets. Even though the CDC, I will point out, the CDC says they have not issued guidance around travel. They still say not to travel, but they're planning on it, and they're coming in over a month. And hopefully we'll have more clarity then. And I can see this happening. It's like what Moynihan today, Brian Moynihan from Bank of America, told David Weston today. He already sees spending patterns change when people get vaccinated.
J.J. Kinahan talking about it too from, TD Ameritrade, just talking specifically about, could see a time maybe in the second half where people are like, all right, I'm so tired of being in lockdown, I'm going to just go travel a bunch. I think he was a little concerned about what it means for productivity. Earlier today, I'm like, okay, what's on your mind? I put this out on Twitter, and one of our listeners said, I'm thinking I better book vacation plans for post-Easter as we will be fully vaccinated and everybody will be booking all the best places to go.
That is so true. It's something I've thought of, but I haven't booked yet.
No, me either. Looking for a little bit more guidance. So definitely following that. The other name that definitely caught our attention, so again, we mentioned airlines. They were among your best gainers in the S&P 500. General Electric was your third biggest gainer in the S&P 500 specifically. That stock was up about 6%. We did see some pressure in that name last week, but Barron's was writing about it specifically over the weekend, how it's still a favorite for the bulls despite the stock price. So starting off with kind of a more bullish take from analysts despite a swift stock drop of more than 10%. That came last week after the company decided to sell its jet leasing business, and that kind of jolted investors with some more financial guidance. So there was a little nervousness. And again, I'm just taking a look at what Barron's was writing about the company, but nonetheless saying bulls like this company.
Yeah, and look, the price was down to just above $12 a share at that point. I mean, think about big picture with GE, a completely different company.
Oh my gosh.
Just in a few years.
Yeah, and listen, there's also a dividend in terms of that, and it was a stock that really kind of was going nowhere. Do want to mention also Eli Lilly, because that stock was your number one decliner in the S&P 500. It was down, Tim, about 9%, and this had to do with its Alzheimer's drug.
Yeah, the study showed modest benefits over a roughly 18-month period, Eli Lilly falling the most in almost a year because this widely anticipated data from a mid-stage study of its Alzheimer's drug fell short of expectations. The company also saying it would take up to 2 years to confirm the finding in an ongoing larger study.
Listen, this is one of those medical ailments, right? Diseases that is just been a difficult one for finding any kind of better treatment for or advanced notification of it, right? And maybe then giving people kind of an earlier heads up, and then maybe being able to treat it earlier. And that's some of the some of the difficulties.
Also keeping an eye on shares of AstraZeneca today, because there was a lot of negative news, especially out of Europe, when it comes to AstraZeneca's vaccine. You got me thinking when you were talking about Lilly, the fact that so much of our conversations around pharma companies right now have to do with the COVID vaccines, the rollout, the delivery, the manufacturing and distribution of them.
Right.
These are companies that do much more than focus on COVID vaccinations.
Yeah, no, it's a really good point. I do feel like among the big vaccines that we've talked about, I mean, Astra just kind of consistently has had a bunch of setbacks. I know the magazine has written about it, and that's, coming from a place where they were out ahead of everybody else early on, and I think everybody thought this was going to be a much bigger play. Having said that, I wouldn't be washing my hands on them yet.
Oh yeah, absolutely. Right? Investors weren't too disappointed today.
No, exactly. All right, you're listening to Bloomberg Radio.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for the price on Wilson.
Open up the door, it's Dave! Who? Dave!
Hey, Mr. Wilson!
Hey, Dave Wilson, give us your stock of the day.
Lending Club, Tim. It's an online marketplace for personal loans. The company entered the banking business last month when a $185 million purchase of Radius Bancorp was completed. Lending Club was founded in 2006 and went public as 2014. The ticker is LC. Now, the shares peaked in the first month of trading and sank as much as 88% within the next 18 months. They set a record low last June. Now, Lending Club has rallied since November. The recovery began accelerating Friday thanks to renewed support for the stock from ARK Investments' Kathy Wood. Data compiled by Bloomberg shows ARK is among Lending Club's largest shareholders based on the total stake of its exchange-traded funds. ARK's FinTech Innovation ETF added to its holding Thursday by buying more than 228,000 shares. In response, Lending Club rose 18% Friday and another 13% plus today.
Wow.
Combine those gains, you're talking about the stock's biggest two-day advance ever, more than 33.5%.
Yeah. And I think it's interesting, too. I just went to the HDS function on the Bloomberg, and ARK, as you note, I think you sent us some notes around earlier, ARK funds collectively are the company's largest shareholder, and they are in there big time.
Kathy Wood,
Based on data from the end of last year, now they are reporting on a daily basis, so
good point.
That number may be shifting nonetheless. It's certainly important, and having Kathy Wood backing your company seems to be a plus these days.
Well, this is one of our big plays, though, fintech and innovation in that space. Dave, thank you so much. Thank you so much.
Thank you. Beware the Ides of March. Okay?
You're getting into a car.
I will.
All right, let's get to world and national news. Over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. President Joe Biden and Vice President Kamala Harris are fanning out this week to spread the word about the $1.9 trillion stimulus package. Biden spoke about two key goals in the next 10 days.
Shots in arms and money in pockets. That's important. The American Rescue Plan is already doing what it was designed to do. Make a difference in people's everyday lives.
Biden heads to Pennsylvania tomorrow, while Vice President Harris will go to Nevada and Colorado. Then both of them will head to Atlanta Friday. Well, the president has tapped a White House veteran to oversee the implementation of the American Rescue Plan. We get details from Bloomberg's John Tucker.
Biden has selected Gene Sperling, a former White House economic advisor to both Bill Clinton and Barack Obama. Sperling will work with the heads of the White House policy councils and leaders at federal agencies with the mission of quickly distributing federal dollars. The stimulus legislation that President Biden signed on Thursday includes more than $410 billion of direct payments for most Americans, the third direct cash infusion in less than a year. Sperling had been considered a potential candidate to lead the Office of Management and Budget after Neera Tanden withdrew her nomination. John Tucker, Bloomberg Radio.
Two men are in custody charged with assaulting U.S. Capitol Police Officer Brian Sicknick with bear spray during the January 6th riot. Sicknick died a day later. Julian Cater of Pennsylvania and George Tanios of West Virginia were arrested yesterday. According to the arrest papers, Cater was spotted on video discharging a canister of bear spray. Global news 24 hours a day on air and on Bloomberg Quick Take.
All right, you're listening to Bloomberg Business Week. I'm Carol Massar in our Interactive Brokers studio, along with Charlie Pellet of Bloomberg News. And Charlie, I just mentioned a little bit, and I think you did too earlier, about the really standout play today, and that was some of the airlines.
Indeed. Look at them go today flying high. UAL, for example, up 8.3%. American Airlines Group up 7.7%. Delta surging 2.3%. Southwest up by 1.75%. JetBlue up today by 5.9%. All of this is you and Tim were talking about, hey, what are your summer plans and how soon do you want to get on an airplane?
Well, speaking of plans, listen, it's not just what we're talking about it, but it's also a bunch of CEOs of the major airlines at a JP Morgan Chase & Co. conference, specifically JetBlue, Southwest. They both see first quarter revenue declining less than they originally expected. They said that in advance of that JP Morgan conference. Delta Airlines said daily cash sales have improved 30% this month from February. So they're all starting to get indications of things being a lot better. But I feel like it mirrors what we've been hearing from a lot of individuals, Charlie, about the second half. People are starting to talk about traveling again. When will you travel?
Well, I can't wait to get on an airplane, but I got to tell you, I spent a lot of time checking out the likes of Expedia or Travelocity or any of the online services just to find out what fares are like. And fares are very often quite high depending on the route that you're traveling on, because a lot of the airlines have fewer planes in the sky, and the planes that they do have, they are trying to fill as many seats as possible. So if you're looking for bargains, don't be shocked if you can't find bargains.
Yeah, exactly. It has to do with supply and demand or seat capacity, in terms of what's out there. Listen to this, though. U.S. airlines carried more passengers on Friday and Saturday than at any point since March 16, 2020, when the pandemic erupted and caused that steep decline in air travel. So both days, Charlie, exceeding 1.3 million passengers, according to the TSA.
Indeed, and I'm betting most of that leisure, certainly not business.
Yeah, exactly. We haven't seen that in a while and don't expect it maybe to come back as quickly. All right, Charlie, thank you so much. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. S&P 500 Index up for a fifth straight trading session led by utilities and real estate, a record on the S&P. Dow Jones Industrial Average also closed at a record, finished up for a seventh session today in a row. NASDAQ up 139, no record, up by 1% today. The NASDAQ 100 Index up 1.1%. S&P up 25, a gain of about 0.6%. The Dow up 174, up by 0.5%. 10-year yield 1.60%. Gold up 0.2%, $17.30 the ounce. And West Texas Intermediate crude down 0.4%, $65.38 a barrel. So again, stocks climbing to a record for a third consecutive trading session on the S&P. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, really appreciate the update. Charlie Pellet there with a Bloomberg Business News Flash. Well, it has been, as you know, we've been saying this, about a year since the World Health Organization declared that the coronavirus outbreak was a global pandemic. So much has happened since then. Many have said going back to normal is not what happened, since things have changed so much as a result of the health crisis. So one way to see what is on the minds of individuals is the Edelman Trust Barometer, which we have gotten to several times over the past 12 months. And back with the latest, and which looks at the past 12 months, is the founder and CEO of the global communications firm Edelman. He is Richard Edelman, and he's back with us on the phone in New York. Richard, how are you?
Hey, Carol, how you doing?
I'm doing.
Can't believe it's a year.
Tell me about it. In some ways, it feels like it was yesterday. Some days, it feels like it was a decade ago. It's just kind of crazy. I read through all of the latest Trust Barometer, and I want to get to the details. But first, remind our audience, because you guys do this survey several times throughout a year. Tell us how you go about it, who you talk to, and a little bit of the process.
So last weekend, we talked to 2,500 Americans across the economic spectrum, across the geographies, and we do it online. And we last did it in December, and you'll recall that business was the most trusted institution in the world for the first time. The deep divide between a Trump voter and a Biden voter, for example, especially about media, where there was a 40-point difference in terms of trust. The only thing they could agree on was that business is trusted, and especially my employer. The trust is local. That I trust my CEO, my colleagues at work, and so things near me, because I can control that relationship.
Well, okay, and so that was last time around. What's interesting in this time around is there's not a lot of trust of anything.
Yeah, well, Carol, I think the most important thing to say out of this is America is in shock. I wrote my essay last week about America in trauma. And I think half the people we surveyed said they knew someone who had been hospitalized or was dead and, had gotten sick from COVID. And 2/3 said, I'm still living in a pandemic survival mode. And I know the markets are going up and everybody's optimistic about the future, but the markets are not seen today. It's a real kind of stunning thing that more people have died than in World War II, World War I, Vietnam, and Korea.
Yeah.
And we are literally 25% of the deaths of the world, something like this. It's scary.
It's shocking. Well, I can hear it in your voice too, Richard. And you're right. I think about this, when we actually, it's not just numbers and stats that we roll off here. It's individuals. And as you said, most people either know someone or know someone who lost someone because of COVID specifically. Listen, you have been talking to CEOs for so many years. How is this kind of changing how they will run their companies going forward, especially if they're seeing these surveys and they're saying our employees don't trust us?
So I think they feel a special responsibility after this year to do differently. And I actually feel very inspired by that. We have clients, Unilever, for instance, that changed the song on the ice cream trucks because they found out that it was a racist minstrel song from the 1880s. And within a month, they said, okay, we're commissioning a new song with RZA from Wu-Tang Clan, and the songs for Memorial Day are going to be different. Kids are going to have a different jingle. That's the kind of speed and agility that American business is doing. Or Dan Schulman of PayPal saying, I found out that half my people are living kind of on a hand-to-mouth way, and I have to raise their wages. That's amazing. Flexibility like I've never seen before, Carol.
Yeah, which is really remarkable. It's interesting too, Richard, like some of the uncomfortable conversations we've been having, and one individual said to me, and she's like, you're not going to believe this is going to come out of my mouth. And this is from a Black American, said, we need to kind of thank Donald Trump in some ways, because there are conversations that came out over the last year to some extent because of some of what he said and the conversations that came out of that and that we're having on a corporate level that we didn't have before, to be fair.
Well, I think one big thing that really is important, though, that I want the listeners to process is we cannot, as business, force our employees to get vaccinated. 70% of our respondents said, listen, I'm prepared to consider it, but don't compel me. And the same thing about only 60% are prepared to go back to work, to the workplace, to the city, because they're still afraid. Only 15% said that they're ready to take the subway. 20% said they're ready to fly. 25% saying they're ready to go see grandma. So again, we're still in trauma. Small steps will get business to the right place.
Yeah, and I think that's kind of interesting. We've been having a lot of conversations, whether it's with the likes of Jamie Dimon or Brian Moynihan and other CEOs. And I think there is that, we can't force employees, to get the vaccine or come back to work. And I think, this is a comfort level. And it sounds like that's what, obviously, the survey showed, but that's what sounds like what's coming out in some of the conversations you're having with CEOs as well. Just got about 30 seconds, then we'll come back and talk more.
Great.
All right, you are listening to Bloomberg Business Week, and we're going to get back to our conversation with the founder and CEO of Edelman, Richard Edelman. They are out with their latest trust barometer, and it really is taking a look at the past year and just a good gut check on where we are. And we'll find out a little bit more in terms of how people are feeling, and he was breaking down some of them, just really kind of mirroring a lot of the conversations that we've been having with executives. All right, just a quick reminder of how we ended up the trading day on this Monday, pretty much at our best levels of the session. So up 174 points on the Dow, S&P with a gain of almost 26 points, and the NASDAQ up almost 140. You are listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. We're going to get right back to our conversation with Richard Edelman. We're talking about trust and whether it's government, businesses, institutions, where Americans are finding trust in today's current environment. We'll get back to him in just a second. Let's get back, though, to your top business stories. And here is, once again, Charlie Bell.
Hi, thank you very much. Records on Wall Street, Carol, today. Stocks closing at a record for a third consecutive trading session amid growing optimism over the budding economic recovery, as well as progress on vaccines. Long-term Treasury yields edge lower. 10-year 1.60%, with the S&P up 25 today, a gain of 0.6%. The Dow Jones Industrial Average up 174, up 0.5. NASDAQ up 139, up by 1%. Gold up $4 the ounce to $17.31, a gain of 0.2%. West Texas Intermediate crude 65.34 a barrel, down by 0.4%. Benchmark S&P gaining for a fifth straight trading session, led by utilities and real estate. The Dow also closing at a record, up for a seventh session in a row. Bank of America is confident in its growth prospects, even as competition intensifies from fintechs, including Walmart's startup. That from CEO Brian Moynihan, interviewed today on Balance of Power. He talked about a number of other topics, including the rebound in consumer spending and credit card use.
The reality is the consumers of Bank of America, which is 50 million people spending $3 trillion plus a year in all these different forms, are spending more money than they did last year and growing at 10%. And that was before the pandemic. That bodes well.
He says April data will probably show, quote, massive growth compared with 2020, when strict lockdowns were imposed during the pandemic. Europe's biggest countries, including Germany, Italy, Spain, and France, have suspended use of AstraZeneca's COVID-19 vaccine amid a growing health scare that's creating yet another delay for the European Union's inoculation campaign. AstraZeneca shares advanced today, up by 0.7%. The ADRs among some of the other vaccine names. Pfizer up 1.4%. BioNTech up by 4.5%. The ADRs there. Moderna was up 4.9%. Johnson & Johnson up by 0.5%. Recapping, S&P up 25, up 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get back to the founder and CEO of the global communications firm. We're talking about Edelman. Richard Edelman, still with us on the phone in New York City. Richard, there's just so many data points when you guys do this survey on trust. I thought it was interesting, and one that caught my attention. Less than 1 in 3 believe everything will be back to normal by the end of 2021. 35% of Trump voters versus 27% of Biden voters. So there's still a lot of hesitancy about kind of where we are by the end of the year.
So, Carol, I think a lot of this reflects a basic problem with information. So when you see that belief in major news organizations is down 21 points to 42%, so it's down by a third in a year. People don't know where to get good facts. They go to their doctor, they go to local government, but they think the media is biased, they think it's politicized. Only 18% of Trump voters trust the media at all. And so we have a real crisis of information bankruptcy. And our doctors and scientists are definitely the most trusted to tell the truth about the vaccine. And here's where companies have to be smart and get in sort of public health officials and others who have the credibility and the MD behind their name.
Well, and I do wonder, because you've done a series of these trust barometers during the pandemic, how quickly can things change in terms of who individuals are trusting in society? Employer versus a business versus institutions versus the health, institutions. How quickly can it change?
You'll remember last May, government was the most trusted institution, especially local government and Andrew Cuomo, et cetera. And look what's going on now. I mean, the events of the world, trust is really unstable right now. And again, if you're an employer, a small business, you have really to pay attention to the needs of your employees who are not getting quality facts. I heard from the communications head at Columbia University, she's the number one source of information on vaccination and access for the 50,000 employees of that university. That's stunning. It means that, trust in my company's newsletter, for example, is the highest thing. And that's why you have to talk to them. And employees in our study this weekend said, I want to be communicated once a week about this. So again, a company being an information source is kind of a new deal.
Yeah, I do feel like, and I think a lot of people would agree with this, that there is a lot of information that's come down. And, you almost want a clearinghouse, one central place where we all go. And I guess one would assume it would be something like the CDC, but it hasn't necessarily played out that way. And I think in the era of 24/7 cable news and just nonstop online news, it's hard to get control of this. One data point, though, that did stand out for me along these lines, vaccine hesitancy is decreasing.
Absolutely.
Yeah.
So this is really a positive. Vaccine hesitancy, in fact, is, deeply decreased. That 70+% of people say that they'll get a vaccine as soon as possible. That's up 20 points. But we still see that there's a sort of lack of information among those who are hesitant. It is, I don't have enough facts. But I also want to say there's a huge myth about vaccine hesitancy about communities of color. This is very important because everybody says, oh, well, blacks and Hispanics, they're thinking about history. And no, they can't get to appointments.
Yeah.
40% of black and 40% of Hispanics said, I'm qualified to get vaccinated, but I can't get on the website. I can't get registered. That's bad. We have to, even if we have to go door to door or whatever it is, we have to make sure that there's equal opportunity and equal access.
Yeah, I actually think that's a really important distinction because you're right. How many times have said it's a case of minorities don't want to take the vaccine, but you're right. It has to do often with either access to signing up online or just having the ability to take off of work and do it. And it's a really big data point. In terms of demographics, and just got about 30 seconds left, was that the biggest thing that stood out for you?
I think that there's, I think young people have actually suffered disproportionately in this, especially in terms of economic effect. I was shocked. 1 in 3 said, I've had a decrease in my income or I can't get a job. And it's especially true of the 18 to 29. And so, again, we have real work to do to get these young people into the workforce again and not get frustrated and get them going. And also people, women,
right.
Especially. Women are really nervous, more nervous about getting vaccinated, and they've had a disproportionate job impact. So we have to get them back on the wheel.
Well, we always learn a bunch, and it's really a great kind of snapshot of where we are. Richard, thank you so much. Richard Edelman, CEO at Edelman, on the phone in New York City. Let's get another check on world and national news. Back to Nancy Lyons. We go in D.C. Hi, Nancy.
Hey, Carol. President Joe Biden and Vice President Kamala Harris are kicking off what the White House is calling the Help is Here tour. The cross-country tour aims to make the case for the $1.9 trillion coronavirus relief bill that Biden signed into law last week. And Biden says he's appointing Gene Sperling, a White House veteran, to oversee its implementation. He'll work with the heads of the White House Policy Council and federal agencies to get funds out quickly and optimize their effectiveness.
We're going to make sure that the benefits of the American Rescue Plan go out quickly and directly to the American people where they belong.
Biden will travel to the Philadelphia suburbs tomorrow, then on to Atlanta Friday. Now that the Biden administration has achieved its goal for more pandemic relief, the focus now is on developing an infrastructure plan. Transportation Secretary Pete Buttigieg today spoke about it while visiting a UPS facility in the Washington suburbs.
Conversations are taking place right now, as you've seen, Oval Office meetings with the president and leaders from both parties, from both houses, and it's fair to say that in short order you're going to be seeing more.
House Republican leader Kevin McCarthy thinks the president's focus needs to be on the U.S.-Mexican border, where there's been a spike in illegal immigration. McCarthy's been touring a migrant facility in El Paso, Texas today with fellow Republicans.
This is where he should bring Air Force One. This is where he should look the people in the eye. This is where he should talk to the border agents.
The Biden administration has requested FEMA help in processing the growing number of children and teens coming across the border. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, you are listening to Bloomberg Business Week. Carol Massard joining me once again is Charlie Pellet of Bloomberg News. And this story, I said at the top of our broadcast, it was going to be about the most read stories on the Bloomberg today. And here's another one. This has to do, Charlie, with Two Sigma Investments. It's a company. It's a quant firm. I think it's about a $58 billion quant firm, so it's pretty big. So anyway, Two Sigma Investments planning to ask staff to return to the office in September, and then, Charlie, they're going to experiment with a hybrid model that allows them to work remotely 2 days a week.
We are living in very interesting times, Carol, just in terms of the way that workplaces are managed. But I thought that the market guest that we had on at 3:50 New York time, J.J. Kinahan from TD Ameritrade, summed it up with a nice quote when he said, "Productivity up, creativity down." And there's a lot to be had working in the office, having random encounters, run-ins with people that you may or may not know, talking over the proverbial water cooler, which I don't seem to see in offices too much these days. But you tend to build on ideas, meet people, and expand your network. So there's a lot of benefits to having people in the office.
Yeah, listen, I think most, heads of companies and institutions are kind of floored by how much everybody was able to actually get done working from home. But yeah, it's going to be different. It definitely is. And there's something about that face-to-face interaction or running into somebody. It's certainly a big part of our culture here at Bloomberg. But listen, this company, Two Sigmas, they've got about 1,600 staff around the globe, 1,350 in the Manhattan offices. And so they're going to experiment a little bit. But, going back to Richard Edelman, who was just on, and they've done a big survey, and they find that 60% of the general population in the U.S. Think employers should not force employees to return to the workplace if they want to work from home because they fear catching COVID-19. And that's really kind of how people are feeling.
And it is such a tightrope for management to have to walk in terms of getting people back to the office. I don't have good answers.
No, I don't either. And I think we're just going to all find our way, just like we found our way through the pandemic. Working from home, we'll have to find our way back as well. All right, Charlie, thank you. This is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. It was an up day on Wall Street. In fact, records for both the Dow Jones Industrial Average and the S&P 500 index. We had Apple, Tesla, and Facebook leading the tech-heavy NASDAQ 100 index higher today. Facebook shares up by 2%. Apple shares advanced today by 2.5%. Tesla was up by 2%. Stocks closing at records for a third consecutive trading session amid growing optimism over the budding economic recovery and progress on vaccines. Long-term Treasury yields edged lower. The 10-year, the yield there, 1.60%, up 5/30 seconds. S&P up 25, up by about 0.7%. NASDAQ up 139, up 1%. Dow also at a record up 174, up today by 0.5%. Gold up 0.3, 17.31 the ounce. A retreat for crude down 0.4%, 65.33 for a barrel of West Texas Intermediate crude. For some of the consumer names, GameStop plunged 16.7% today. AMC Entertainment up 25.8%, and Koss, the headphone company, up 3.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, it's been a year now since the World Health Organization declared the coronavirus outbreak a global pandemic, a year since COVID-19 really disrupted our lives. And at this time in 2020, cities and states across the country were entering lockdowns, while toilet paper, Clorox wipes, and paper towels were flying off the shelves. It's certainly been a year like no other. So let's take a look back at the past 12 months now with Bloomberg's Nathan Hager.
The virus had been confirmed in the U.S. for nearly 2 months and may have been spreading undetected even longer around this time last year. In those early days, it almost felt like the mysterious pneumonia first identified in China wasn't America's problem. But it was 1 year ago, around this time, that the full extent of what this country was about to go through was becoming clear.
The flu has a mortality of 0.1%. This has a mortality of 10 times that.
That warning from Dr. Anthony Fauci came the same day the World Health Organization declared COVID-19 a global pandemic. That night, President Trump banned travel for most of Europe. New York City declared a state of emergency the following day, shutting down Broadway. Then the bottom dropped out.
We're getting ready to close the books on another day of massive moves.
10% drop in the Dow Jones Industrial Average. That is the worst drop since October 19th, 1987.
And the White House took action.
Today, I am officially declaring a national emergency. Two very big words.
Over that next week, New York, New Jersey, and Illinois joined California in issuing stay-at-home orders. More than 21 million Americans lost their jobs in the early weeks of the pandemic. For the millions who were still employed, a new routine of working from home became the norm as their kids tried to get used to class via Zoom. Meanwhile, hospitals found themselves on the front lines. The nightly ritual of city dwellers emerging on their balconies to cheer the first responders spoke to a feeling of we're all in this together in those early days. But cracks would soon emerge. From nurses in Massachusetts,
hospitals across the country are low on protective equipment. We are allotted 1 mask per day to conserve and prepare for the worst.
To state leaders like New York Governor Andrew Cuomo.
Where are the ventilators? Where are the gowns? Where's the PPEs? Where are the masks? Where are they?
President Trump did invoke the Defense Production Act to make ventilators and other equipment for hospitals, but mostly left states to compete among themselves to buy it. Meantime, as the pandemic spread from the cities to the heartland, patience with restrictions began to wear thin.
It's time for our state to be opened up. We're tired of not being able to buy the things that we need.
That woman was in Michigan, where Governor Gretchen Whitmer was the target of a right-wing militia kidnapping plot over her state's stay-at-home order. And a viral video of a Memorial Day crowd at Lake of the Ozarks may have summed up the COVID fatigue heading into a summer that would see even more turmoil.
100,000 lives have now been lost to this virus here in the United States alone.
Then presidential candidate Joe Biden marked that milestone on May 27th as the pandemic was rubbing up against a national reckoning over systemic racism sparked by the killing of George Floyd.
Now we're seeing these mass gatherings over the past several nights
that could, in fact, exacerbate the COVID-19 spread.
Yet even with signs of a second wave of infection, New York's Andrew Cuomo joined other states in slowly reopening over the summer. The political process reopened as well.
The silent majority is stronger than ever before.
President Trump returned to the campaign trail in Tulsa, Oklahoma in June, while Joe Biden continued his campaign from home. The president held dozens more in-person events, including a Rose Garden ceremony that may have led to this.
Breaking news out of the White House as President Trump tests positive for COVID-19.
It was the October surprise in an election that became a referendum on the president's handling of the pandemic. By the time President Trump recovered, the White House made clear it was pinning its hopes on vaccines to stem the tide. Then, just weeks before Christmas, the first sign of hope. 80-year-old Margaret Keener received the world's first COVID vaccine developed by Pfizer. It came less than 9 months into the pandemic, an extraordinary pace of development. But Pfizer CEO Albert Bourla says no corners were cut.
We tested this vaccine with the exact same way that we are testing any vaccine.
After Pfizer's shot came more highly effective vaccines from Moderna and Johnson & Johnson. About 3 months into the vaccine rollout, states have struggled at times with supply issues and prioritizing the most vulnerable. It's now turned into a race to inoculate against new, faster-spreading strains of COVID-19. But after a year that has seen more than 500,000 American lives lost to the pandemic,
we're now on track to have enough vaccine supply for every adult in America by the end of May.
And the new president, Joe Biden, says he hopes the nation will be back to normal by this time next year, after a year like no other. Nathan Hager, Bloomberg Radio.
All right, so I got to tell you, Nathan's piece made us start thinking, too, about what the year has been like and the many smart, thoughtful, and varied voices that we've talked to about COVID, its impact, and really all the other crises that we've been dealing with over the last 12 months. So these voices have really been a guiding light for us, including Nobel laureate economist Paul Krugman, who pointed out that we're not in the clear, at least not yet.
I think we still have another 6 months of rough times because it is very hard to do normal business when people are rightfully still afraid of COVID. And so we're going to be a pandemic-depressed economy for well past the middle of this year. But I'm quite optimistic about after that. I think we don't have the same kind of overhang of excessive debts and so on that we had after the last crisis. So I think we're going to have probably going to be feeling pretty optimistic by this time next year.
She's a voice well known to our audience, Kathy Wood, founder and CEO at ARK Investment. Certainly a lot of changes in the world of investing.
What I've been surprised by over the last really 4 or 5 months is cyclicals and value stocks have started to outperform the broad-based market indices. And the surprise to us is that we and our innovation strategies at ARK outperformed as well. That's very unusual.
Bishop Wayne T. Jackson, founder and CEO of the Impact Network, he's seen firsthand disparities affecting people of color.
In the poorest of the poorest community, some of them have not even received 1 dose of the vaccine. And we know that our community are the ones who are impacted the most in a negative way. And it just goes back to a lot of times people don't understand what African Americans have to go through just based on who we are and how we had to be kidnapped. Our forefathers kidnapped from Africa, brought up here, stripped of their names, and was, made to do free labor.
Carnival CEO Arnold Donald, the cruise line industry, one of the hardest hit by the pandemic.
It's been a tough time. It's a very difficult time for travel and leisure, and obviously difficult time for cruise. We voluntarily paused way back in March of 2020, and we're still not sailing. We've had a few sailings over in Europe, but very limited basis. To have a business with no revenue for such an extended period of time, and a significant burn rate, because obviously we have to keep our ships operational. You can't set these ships up. They're not airplanes. You can't just put them in a hangar. You have to continue to operate them. And so it's been very challenging.
Real estate, no stranger to the effects of the COVID outbreak. Ken Swig, president at Swig Equities.
The activity level that we're seeing in terms of commercial, in terms of tenants starting to look and starting to become more active, and certainly on the residential front, it's as active as it's been since, the past 6-7 years. So that's a good sign going forward. So I'd say new deal transaction volume is starting to pick up.
For some of our guests, the pandemic was a reminder to find balance. Sheila Moravati, president and founder of Habits of Waste.
It's been quiet, I have to say. I was living a very intense life prior to the pandemic. I don't even know how I did it. I mean, I was a classic person that was burning the candle at two ends, and the pandemic just forced us into a very different lifestyle that, really made me think about a lot of things.
All right, so again, just some of the incredible voices that have found time for us over the last year from all walks of life, all industries, so many different institutions, and just giving us kind of an idea of how things are going, what they're seeing, visibility, giving us kind of a heads up on trends that are happening either in their world with their employees or with their customers. So we really are very appreciative and grateful for everyone who found time. We just heard from Richard Edelman, who has found time for us several times over the last year, saying in their latest trust barometer and survey, 2 in 3 Americans still in pandemic survival mode, meaning they're worried about their safety and operating largely in survival mode while waiting for things to get better. So that's kind of the mindset of Americans. All right, Sound On with Kevin Cirilli is coming your way in just a few minutes. Kevin's standing by, so what's on tap?
I'm ready to go, though. I feel like the mayor in this town just said next week they're opening stuff up. No, Carol, I politely disagree with your assessment. I'm ready to go. Let's all open up. Let's get back to I'm going to Texas to have a barbecue before the 4th of July. Who do we have? Congressman Blaine Lukemeyer. That's who we have.
Why does that not surprise me? Hey, don't shoot the messenger. I'm just telling you about a survey.
You know I love you, Carol.
I love you too. Listen, have a really, really good show. Looking forward to it. Sound On with Kevin Cirilli coming up in just a moment. All right, for the whole Bloomberg Business Week team, have a good and safe evening, folks. We will see you tomorrow. Sound On with Kevin coming your way in just a moment. This is Bloomberg.
This is WBBR New York, WDCH-FM Bowie, Baltimore, Washington, WJZ-FM HD2 Catonsville, WRCA Watertown, WBOS HD2 Brookline, Boston, WNBP Newburyport, KNEW Oakland, KOSF 103.7 FM HD2 San Francisco, and SiriusXM Satellite Radio Channel 119. Live from our nation's capital, this is Bloomberg Sound On.
In San Francisco, and this is Bloomberg Technology. Coming up in the next hour. Ready, set, hike. President Biden said to be planning the first major federal tax hike since 1993. Those hardest hit, earners making above $400,000. We'll cover how the markets are reacting. Plus, Europe's biggest countries, including France and Germany, suspend AstraZeneca's COVID vaccines amid a health scare that is growing. More on that, plus plans to expand the vaccination network in the U.S. with Moderna co-founder Noubar Afeyan. And remote work seems to be working. A study done by Upwork finds the transition to remote work this year since the U.S. shutdown may be more successful than many companies and executives anticipated. One of the biggest benefits, productivity. All those stories in a moment, but first, U.S. stocks climbing to all-time highs, but Bitcoin not necessarily joining in on the fun. Bloomberg's Kriti Gupta and Sonali Basak are standing by. Kriti, let's start with you. What are the markets reacting to today?
Well, it's all about that tech outperformance today. You really saw that in a reaction to that 10-year yield. You can look at the chart behind me right from the top, the S&P 500 in the green, but it's that NASDAQ outperformance once again that really caught my eye. It's not just big tech lifting the major averages, Emily. You're also seeing it in the semiconductors index. Once again, a very broad bid for tech today. I do want to flip up the boards and look at the NASDAQ 100 because, of course, we know that that's an index that's had a little bit of pain. But look at this on a 30-year time frame. And I'm bringing this to you because I want you to look at it in comparison to the 1999 tech bubble that you're seeing further along that chart. Jeffrey Gundlach coming out last week and saying that this ratio, the NASDAQ 100 relative to the S&P 500, is the ratio you want to watch. And this is, of course, a chart of just the former. But if you were to look at them on a comparison basis, you can see those same bubble levels being tested right now. So extremely important from a macro point of view. Also important from a macro point of view is just how electric vehicles are really reacting. Of course, that was the story of the fourth quarter of 2020. But now just look at the outperformance that you're seeing compared to the likes of Tesla, which was, of course, the original electric vehicle name that entered the S&P 500. You can really see that outperformance in the Drive ETF that holds all of those electric vehicle makers relative to Tesla, which is just up 0.3% in the last few months. Shonali, over to you.
Kriti, of course, you know, we saw those retail traders hopping into Bitcoin over the weekend, and Bitcoin really coming down today, trading a little over $5,600. You know, Deutsche Bank is now saying that retail traders, individuals ages 25 to 34, may be spending about 50% of their stimulus checks on retail trades. So you do still see rises in Bitcoin miners and brokerages. That includes Riot, Blockchain, Marathon Digital, Voyager Digital, Galaxy Digital. That's Mike Novogratz's firm. But you also have the Reddit and meme stocks still riding upward today. Sundial Growers, Zomerica Express, Costs, all of those still up on the day. We do expect more retail checks to hit later this week, so keep an eye on those retail trades. Emily?
All right, Shonali, thanks so much. And of course, we are beating the drum towards the Coinbase direct listing, which we're expecting in a couple of weeks. Meantime, now that the stimulus has passed, President Biden is turning his attention to tax reform as he's planning the first major tax hike since 1993. Joining us now, Bloomberg's Laura Davison. Laura, tell us what we know about Biden's plan.
So Biden's plan, is really kind of a twofold process that they're looking at. First, they want to roll back those Trump tax cuts. Very short-lived. You know, back in 2017, the corporate rate came down. They're looking at pushing the corporate tax rate back up to around 28%. Same for upper income taxpayers, those earning about $400,000 or more, kick that tax rate back up to about 40% there as well. Kind of after those have been reversed, there's some more ambitious plans that they're looking at things like capital gains rates, so taxes on investments, increasing those significantly, particularly for people who make $1 million or more, looking at small business taxation, looking at the estate tax. So there's a lot of plans in the works. Nothing is set yet, but they're trying to figure out, you know, how this fits into a broader infrastructure plan and how much they need to pay for with these tax increases.
This, as we're heading into tax season crunch time, Laura, what's a sort of timeline for something like this to actually come together and get, you know, both parties on side?
Well, this will definitely be slower moving than we saw with the stimulus bill that just passed. This is going to take a lot of time for Congress to get sorted out. You know, they're calling it an infrastructure bill, but they're really looking at infrastructure, energy policy, education policy, health policy. So they're Democrats are kind of sorting out what will be in this broader bill. Pelosi and Schumer have kind of instructed lawmakers to work with Republicans, work with the other side of the aisle. It's unclear yet if this will be a bipartisan bill or if this will be similar to the stimulus legislation that Democrats will ultimately decide to go it alone. So they're kind of in that initial stages right now. I expect that we'll see more details come out later in the spring, you know, maybe around May. Over the summer, the negotiations will intensify, and the White House and leaders in Congress are looking to pass something early fall, you know, around September time.
Well, and I wonder if there's something about the optics of this. You know, would the administration want the U.S. and most Americans to be through the pandemic crisis? You know, when they're hiking taxes, at least when it comes to vaccinations and more people getting back to work.
And this is kind of one of the things that's still kind of being figured out. The White House and congressional leaders have said they won't make the taxes retroactive. They won't go back to the start of 2021, for example, but they could kick in as soon as 2022. So they're very closely watching where the economy is, where consumer sentiment is. You know, with taxes, you can always phase them in. So maybe only have like a slight increase in year one over a several year period. All of those things are still to be decided, but that's one thing that the more cautious members of the administration are a little bit concerned about, of doing too much too soon on the tax front.
All right, Bloomberg's Laura Davison on the tax beat for us. Thanks so much for that update. We're going to be talking a lot more about the stimulus plan as well as President Biden's proposed tax plan with special guests throughout the week. Join us all week long as we mark the 1-year anniversary of the U.S. shutdown. We will be joined by Uber CEO Dara Khosrowshahi, the CEO of Expedia, Peter Kern, Melinda Gates, co-chair of the Bill and Melinda Gates Foundation, and the CEO of Peloton, John Foley. Just some of my guests on Bloomberg Technology this week. You don't want to miss it. And speaking of 1 year since the pandemic, next I'll be speaking with Seattle's Mayor Jenny Durkan, her insight on the critical decisions made early in the pandemic, how they paid off. Of course, you'll remember it was the Seattle area that saw the very first confirmed case of COVID-19 in the United States. How the city is faring 1 year on. This is Bloomberg.
We are nowhere near the testing capacity that we need in this city to really open up our economy in a meaningful way. So we've been working with the governor, talking to the federal authorities. We need more testing capacity on a significant level, and we're also going to need more contact tracing.
Seattle Mayor Jenny Durkan there in the very early days of the pandemic last April about the severity of which it was hitting her city, which saw the very first confirmed case in the United States of COVID-19. Since then, Seattle has been at the forefront of the pandemic response with the lowest number of cases, hospitalizations in the top 30 major cities. With me now, Seattle Mayor Jenny Durkan herself. Mayor Durkan, thank you so much for joining us. I mean, you've probably lived a few lifetimes in the last year with the first case being in your area. Take me back to that moment, how terrifying that was for you as a leader compared to where we are today.
You know, I think it is so remarkable to be here a year later and to hear that clip
Those early days were some of the most profound moments, I think, in my life, in the life of our city. So we knew we had the first confirmed cases, but because we didn't have testing, we were flying completely blind. When we started taking our first action, Seattle actually hadn't had any positive test cases because we didn't have any tests. But we had great scientific researchers who had been doing a flu study. They went back and tested some of those and realized that we probably had over 1,000 cases in our region. And if we didn't act, within 6 to 8 weeks, we could have 70,000 and 1,300 deaths. And so we were looking at two terrible choices. One, not take any action until we knew more, which meant there would be more sickness and death and maybe overflow our hospitals. Or two, start taking drastic actions and know the impacts on our economy. So it was a very bleak time then, but it has improved enormously now.
Do you feel like the crisis is over, or do you feel like there's a long road ahead?
I think the crisis is far from over, and I would urge everyone to have some caution. I heard that the clip about testing. We ended up getting our testing capability by making a deal with South Korea to get enough testing capability for the Seattle area. And we've done now almost 700,000 tests, 1 in 3 people in Seattle. That helped us know where the disease was and kept it down. In the same facility where I opened an Army hospital about a year ago, this weekend we opened the largest civilian-led vaccination center. And we have to get vaccination shots into arms. Until we do that, we're still at risk because this virus, it is so transmissible, variants are on the rise, and so we really need people to still, even though we are so close, we can't let our guard down. We have to wear our masks, socially distance, and be cautious because we've seen in Europe now, Paris is going backwards, Italy's going backwards, Ireland's in still the highest stage lockdown. The variants are very dangerous and can take hold very quickly.
Now, as you mentioned, you've turned the NFL stadium into a mass vaccination site. You have publicly said you want Seattle to be the first major U.S. city to have vaccinated 70% of its population. How likely is it that you're going to get there?
We will get there if the federal government gives us the vaccines. Right now, we don't get a direct allocation. We're not one of the cities that does. We rely on the state and King County Public Health, and then our partners at some of the hospital systems that are getting allocations. But we need to greatly increase how much vaccine we get. We gave 2,200 shots on Sunday, but we're capable in that facility of doing over 20,000 a day if we get the vaccine. So if they give us the vaccine, we will get shots into arms.
So let's talk then about how the Seattle economy recovers. You were very aggressive early on about the shutdown and prioritizing safety. Of course, you've got business owners out there who've said it's been incredibly tough. Some businesses have not survived. Where do you expect the Seattle economy to be, let's say, a year from now, once we are hopefully through this, given the measures that you have in place to continue to support the economy?
So we're fortunate because we had some strong sectors of the economy. Our tech economy, for particular, remains strong. Our port economy was impacted at the beginning, but is picking up steam. But it's really our small business economy. Over 250,000 people, about that in Seattle, were employed by small businesses. That's about 5 Amazons for Seattle. We really need to focus on those industries and to make sure our small businesses come back. We have many empty places in our downtown. So I'm very focused on a downtown recovery. How do we get small businesses back and keep them vibrant? How do we make sure our arts and culture are activated again? And how do we get our hospitality industry and our tourism industry going? It's also going to require us to focus on some of the other things that during the pandemic have been hard. CDC obviously said we had to leave people who were experiencing homelessness in place. And we have increased, like all the major cities on the West Coast, increased visible homelessness. So this week I've announced and will be announcing some very large endeavors to make sure we bring more people inside and give that economic stimulus to our small businesses, both in their neighborhood commercial districts and in our downtown core.
Right. I know homelessness is a big concern there in my area, the Bay Area as well. You know, as you mentioned, Seattle is home to tech giants like Amazon. Of course, you've got Microsoft not far away. Is there more that you want big tech, big business to do to help the local economy?
I think they can, and part of that is working with us so that we know, you know, this pandemic affected everybody's lives, how we live and how we work, and every company in America now is evaluating, you know, the brick and mortar locations. How often will they actually bring all their employees into a brick and mortar location? How many will continue to work from home? We're having a lot of conversations with them because having those employees, particularly in our downtown core, is part of our strategy to get it back to the level of vibrancy that we had before. People will want to live downtown if they can walk to work. And so working with those sectors to really understand and working together how we make sure that any new business model, particularly a work from home model, takes into consideration the need to maintain our urban centers and have that really vibrant cores that we need.
Meantime, we were just talking about the president's tax plan. Those hardest hit would be those making over $400,000. We've got the stimulus now making its way out into the world, but you say you need more vaccines. You know, what can the Biden administration do that would really make a difference for Seattle?
So last week, a number of mayors from cities across America, in both what people would consider Republican mayors and Democratic mayors, though most of us are nonpartisan, really urged direct allocations, because if we are the closest to these problems, we've seen when mayors work and are empowered, we can really get to the problems. And so right now, the allocations go to pharmacies and to the states and to some tribal partners. We'd like the administration to give or ensure direct vaccinations to the cities so that we can make sure that we get people vaccinated. You know, America won't recover if its cities don't recover. That is the heartbeat of America. And so focusing on those cities and really working with local governments, I think will be good. I will say this, the Biden administration has been very, very supportive since they came into office. They've met with mayors probably more in these few months than the previous administration did in the entire 4 years. And so I think you'll see a renewed focus on helping local officials really meet some of the issues and problems they have. Because I do believe, again, that, you know, the economy of America really relies on us doing well. And we will come back, but this is going to be a tough road. You know, this isn't an on and off switch. And when we turn the dial to turn down the economy, it will not spring back quite as quickly. And so we've got to be very intentional about that.
All right, Mayor Durkin, thank you so much for joining us on, you know, such a momentous day, and appreciate you taking us down memory lane a bit and talking about where you are now. Seattle Mayor Jenny Durkin there. Meantime, billionaire Pershing Square founder Bill Ackman has donated 26.5 million shares of the e-commerce company Coupang to the Pershing Square Foundation. The amount, worth about $1.3 billion. Ackman was an early investor in the company, which priced its share offering last week above the marketed range, raising $4.6 billion, valuing the company at approximately $60 billion. The company's market cap now about $87 billion post-IPO. And as we head to break, speaking of valuation, Stripe overtook SpaceX and Instacart thanks to a $600 million funding round. Its value has now jumped to $95 billion, becoming the top valued U.S. startups. The online payments processor has made its two Irish siblings, brothers, John and Patrick Collison, worth $11.4 billion each. Talk about the luck of the Irish, or just hard work. Happy St. Patrick's Day. This is Bloomberg. Hollywood loves movies about Hollywood. The Netflix film Mank, about Citizen Kane screenwriter Herman Mankiewicz, received 10 Oscar nominations, including Best Picture, Best Director, and Best Actor. Mank bringing Netflix one step closer to winning the coveted Best Picture award for the first time ever. Lucas Shaw joins us now. Lucas, talk to us a little bit about what the significance of this is for Netflix, given that they only recently, started making original films.
Yeah, I mean, look, Netflix is about 5 years into its efforts of making original films. It scaled up really quickly from making a handful a year to now making more than 50 each of the past 3 years. It has sought and spent a lot of money campaigning for Oscars as a validation of quality, because there's always been this stigma against sort of TV movies, and Netflix has tried to replicate the full gamut of movies from kind of the cheesy TV movie to big Hollywood blockbusters. It's gotten a ton of nominations over the past couple of years. This year is yet another kind of high mark for them. I believe it's 35. And if they could finally get a Best Picture award, I think it would sort of dispel this idea that Netflix movies are somehow less good than the movies you see elsewhere.
Well, you had a really interesting newsletter out over the weekend talking about how award shows, of course, we just watched the Grammys, the importance of them may be declining. Obviously, viewership has plummeted in the pandemic period, but longer term, how much will they really mean?
Yeah, I think for any filmmaker, and that's an important constituency for Netflix, winning an Oscar is still a big deal. We're looking at what will probably be the least watched Oscars on record, or at least in modern history this year. Some of that is the pandemic. Some of that is longer term trends of viewership going down. Some of it is that you didn't have a lot of movies come out last year, or those that did were kind of the indie variety. But it's still the #1 award show and one of the only TV broadcasts that gets viewership on par with major sporting events. It's pretty much a bunch of football games and then the Oscars. And so even if the Oscars declines as much as, say, the Grammys and Globes did, it will be much bigger than either of those. And it will mean a lot to Netflix. It will kind of be a fitting apex or moment in its transformation into a big entertainment company and not just a tech company.
Meantime, Netflix is cracking down on shared passwords in an effort to get more customers to pay up. What can you tell us?
They've toyed with this a few times over the past couple of years. Netflix has known for years that there are millions of users who are using other people's accounts, either ones that they are stealing or ones that they're just kind of bumming from friends. They have tried not to make a big fuss out of it because they've been in growth mode. They don't want to alienate their customers, and they're just focused on kind of getting as many people to watch their shows and be excited, and they figured they could convert them into paying customers over time. In certain markets, Netflix is now so established that I think they're focused a little more on eking out all these incremental subscriber gains, places like the U.S., and so they will continue to experiment with ways of kind of nudging people to pay. I don't think they're, even what they're testing right now, it's not immediately going to shut you down. It's just going to give you a prompt.
All right, Lucas Shaw, All Things Hollywood, thank you so much for that update. Mank, we'll keep our eye on it. Coming up, the COVID pandemic marks the biggest vaccination campaign in U.S. history, fueled by some of the greatest achievements in technology and science. We will speak to Nubar Afeyan, co-founder of Moderna and flagship pioneering CEO, about the vaccine progress over the last year, as well as the challenges ahead. That is next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco, recapping our top story. U.S. stocks hitting record highs Monday on growing optimism about the budding economic recovery and progress on vaccines. Bloomberg's Kriti Gupta has a snapshot from New York. Hey, Kriti.
Well, Emily, at the top of the show, we talked about that tech outperformance in today's trading session, but there's one name that really sticks out, and that name is Apple, gaining as much as 4% on the day and taking its supply chain with it. Now, I want to spin this forward to the Asian trading session because, of course, we know some of these supply chains extend into Asia. So if we see this dynamic happen here in the States, we could actually see it happen over in Asia as well. Flip up the boards, and I want to bring you to the next story on today's docket, and that is that corporate tax hike that Joe Biden's administration is talking about, increasing the rate from 21% to 28%. This is where tech really comes to the forefront because this could actually disincentivize some of that repatriation of money that tech companies were actually incentivized to do under the Trump administration. So that could, of course, impact some of those big tech names, longer fundamentals. And lastly, I want to hit that vaccine story. AstraZeneca coming under some hot water today, or getting into some hot water today, I should say, after its candidate was suspended in several European countries. Its stock, though, still up on the day. When it comes to its stock performance, still underperforming the big comparison, though. The big winner in the stock market among its peers, Moderna, up over 100% on a yearly basis. You can just see that in that chart. So lots going on in the vaccine space, Emily.
All right, we're going to talk to Moderna co-founder Nubar Afeyan in a moment. Kriti Gupta, thank you so much. For more now on vaccines and how Facebook is trying to do its part to fight misinformation, we're joined by Bloomberg's Sarah Fryer, who, of course, covers social media for us. So Facebook is introducing some new tools today to flag vaccine misinformation. Sarah, what can you tell us?
Facebook is being a little bit more explicit with its messages for people about when they may be seeing something that is false. So they're going to give a little bit more context instead of just redirecting people to their COVID-19 vaccination info page the way they did during the U.S. presidential election. They're saying very explicitly, if they are seeing vaccine hesitancy, they will say that the vaccines have been thoroughly tested, as noted by the WHO. They're really trying to undo years of vaccine hesitancy that has bubbled up on their platform.
Now, I guess my question is it too little, too late? I mean, vaccine misinformation has proliferated online on sites like Facebook now for a year, and much longer than that if you talk about vaccines in general. How well is, what they're doing in general really working?
A lot of critics think it is too little, too late, because when you look at some of their policies, like now going to ban repeat offenders, you're sort of missing the fact that this hesitancy, this vaccine skepticism has trickled into family groups, into neighborhood groups, into parent groups. It has become something that it's not just the wellness influencers and the anti-vaxxers that are pushing it. It has become more mainstream. And so they need to do something about the fundamental way their platform works, which is by highlighting content that sparks emotions like fear and shock. So I think that is maybe a bigger factor that they're not considering.
All right, Sarah Fryer, thank you so much for that update. For more on the latest vaccine rollout, we are joined now by Moderna co-founder Nubar Afeyan, who is also the CEO at Flagship Pioneering. Nubar, it has been a long year, and obviously Moderna's vaccine has been a standout success, but we still have hundreds of millions of Americans who don't have it, and many more around the world. I'd love to start, now that we are a year into this, with your thoughts on where we are and what the biggest challenges are for the vaccine rollout that you see ahead.
Well, Emily, thanks for having me again. Yes, it does seem like a very long year. In fact, here we are back in March, and it feels like we're stuck in March a little bit. The feeling of time having frozen, I think, has afflicted all of us. It's been a very tough year of personal loss, of economic loss, and yet it's been a pretty triumphant year in terms of science and collaboration coming forward with solutions such as the vaccines. And we have quite a lot of work yet to do. Clearly, the vaccine has been produced We've got multiple alternatives. We have supplies that have been ramped up, certainly in the U.S., increasing day by day. And yet we need to make sure that the distribution is up to par to the availability, and that we get as many people vaccinated as quickly as possible, even while we keep our sights on variants and other threats that continually have to be dealt with in order for us to truly contain this pandemic.
How much do you think vaccine misinformation on sites like Facebook has actually held the process back?
You know, it's hard for me to quantify, but I'd say qualitatively, there's been a lot on social media, and I'd say even more broadly on media, there's just a lot of speculation that it's hard to tell apart how much of it has an agenda behind it and how much does not, and it blurs. But it definitely is the case that it's difficult to know who to trust and who to follow. Clearly, there are folks whose voices we've trusted. Certainly the government experts, health experts have been consistent in their advice, and our sense is that people need to follow the medical profession and the data far more than speculation and conspiracy theories.
Now, what is your reaction to several European countries, including the biggest European countries, temporarily suspending the AstraZeneca vaccine due to abnormal blood clotting? Do you think it should be permanently halted?
Emily, that would be impossible for me to comment on by virtue of what I just said, which is that it's very much a matter of data and facts as opposed to speculation. And I'll be the last person to add my speculation to it, because that's what that would be. People commenting on it generally don't have the facts. I have a lot of respect for our colleagues at AstraZeneca, and for that matter, everyone who's working on developing a vaccine, I think, is doing their utmost to share information and be able to deliver real solutions. But at the same time, we're going to learn a lot as the vaccine comes to the market, and as we detect certain things that we need to pursue them, wrestle them to the ground, and through a scientific method, be able to delineate that which is causally linked versus that which happens to be seen, but given the large numbers, cannot be linked to the vaccine. And until that's done,